What's up, guys? Good morning. Wasn't going to do a live today. Markets just ran. A couple things I'm looking for. So, just to give you an idea of what's really going on. All right, we're back at the last Fed meeting. All right, that's why there's a couple different reasons why I put these boxes here, but you wouldn't know it. Right now, you're at the low of the last Fed meeting. Right, you're at the low of the last Fed meeting. There's a reason why I do these. A few different reasons. So the market's running away. Hello, 430. Kind of saw that coming. Again, I can't do anything until we get a pullback. Right? I need to test this level right here. I need to test a 418, 420 area. Right? Market can do whatever it wants to do. I'm just, if we can pull back and hold a 20-day and it look like we start to get some volume, then yeah, that's a different story. So it's another trade idea that I'm looking for this morning. All right, we're breaking back above the 200-day moving average. If we can do that and hold again, we have Apple earnings, we have non-farm payrolls. If non-farm payroll comes in better than expected, this market will give us the pullback. Initial jobless claims came in a bit higher. So we are seeing, did we see the low last week? For any of you guys that pay attention to any of this data, you've seen that we got below the 200,000 mark last week. All right, now we're back into it. I think it was what, 180 some thousand, 190 some thousand, or just under 200,000, right? And then today, initial jobless claims come in at 217, so that was a big jump. This says here previous 212, so maybe it was 2 weeks ago. So yeah, right here, see October, yeah. If you guys see the chart, you can see no. See, this is bullshit. Because remember, we got under the 200 mark. That's why I don't like this stuff. It's a total joke. It really is. How many times you're gonna look at this data and the data's going to come out, it's going to say a number, then you're going to see something like this. Right? If it rounded it up to 200, why didn't it round 217 to 220? So, this here, 2 weeks ago, was under 200,000. It was like 190 some thousand, 198 or so. So, it was definitely not 200. It was not 200. So now, did we see the bottom? And now we're starting to rise. And look, in 3 weeks, we took out 4 weeks of upside. All right. We can get full. So this is a second continuous week of higher initial jobless claims. If we continue to get that, this is what the market wants to see. The backside to that. If you start seeing numbers start to jump like huge gaps, like we report next week at 220, just as an example, and then you see a 280, boom, right? Okay, market, bad news is bad news, good news is good news. Market's gonna flip. Right now, bad news is good news is bad news, right? Labor market's softening at a decent pace, right? That's a soft landing. Quarter in the bucket. That's a drop in the soft landing bucket. You start seeing we're hanging out again at what, 217 it was. Call it 220. You see next week we come in at like 220, 222, and then the following week, just as an example, again, this may not happen until like December, January, February, March. It may not happen for months. It may not happen at all. But if you see a jump that goes from 217 to 230, and then from 230 to 270 to, you got to start thinking, okay, Fed's done too much, too quick, recession talk. All right, so this is how you guys are going to start to learn how to read this data. All right, so if you guys, I don't know what other stuff you guys watch, please do yourself a due diligence to know whether or not they even know what the hell they're talking about when they talk about data. And do they know how to read the data appropriately? All right. So now we went from the initial jobless claims pulling back. Now they're starting to jump up a bit. This is what the Fed wants. This is their biggest um, data set that they're trying to get a control of is the labor market to help slow down demand. So far, so good. We'll see what non-farm payroll brings in Apple earnings. Nothing will probably happen with Apple earnings. Everything will stay the same. So, things will just report decent, and market will just continue for whatever reason to go to the upside, and that's okay. Like I'm bullish the market right now, seasonally, and I just don't. We don't have a reason to sell off, right? We don't have a reason to say that the Fed's done too much too quick. So far, soft landing, right? Maybe the Fed eases out of this whole situation. Um, Yields are pulling back, so that's going to give us a rise in equity prices. Pretty basic stuff here. Um, Looks like we're pulling back here up at this double top at 426. So, Tesla, I'm actually looking for pullbacks. All right. Now, I want you guys to think about something here. If it happens, it happens. If it doesn't, it doesn't. I'm not going to make a trade. I feel like everything's already taken away. I feel like a lot of this stuff's been taken away from us. Tesla has already done over its max ATR. All right. You're talking 298 to 215. That's what? 10. Where are we at? 298. And we're at 215. 8, 9, 10, 11, 12, 13, 14, 15. That's a $17 move, guys. All right. This thing should reverse. It should reverse. I mean, how much farther do you think that this thing's going to make a move in one move? Right? This is one ATR. This is one move. So, I don't know if there's news. I've tried to look. I haven't really seen anything. That's not telling me anything. Tesla CEO said Tuesday that he sees room for improvement in the company's deliveries despite fears of... Okay, is that enough to move 17 points and to continue to the upside? I don't think so, right? But it's just following the market, and that's why I think that is your mark right there. We're going to find resistance. I want to see if we can pull back into the low 200s on Tesla. I'm looking for 205. All right, Shopify 50-day holds. I'm going to look for the upside $60 target on Shopify. Let me I got everything written down so we can just run through it really quickly. Just want to see something real quick. Come on, man. Yeah, so this is where I want to see. I want to see us at least pull back to 208, 205. Right? I want to see us get back down to this level. It may take a couple days. We may not get it today. We could just consolidate up here and try to go higher. Let's go look at Shopify real quick and some of the other names. The moves have been taken away. It is what it is. I'm just going to sit back and I'm really frustrated right now. All right? I've been up since 5 o'clock this morning watching this market just go to the upside. Maybe I go look for small caps or something. I wanted to grab the longs yesterday, but the longs were so much that I couldn't justify paying that amount. All right, Shopify. Let's see if we pull Shopify back to 55. That 50-day moving average, 55 area. All right. And then I'm going to look to see if we can get another bounce, which it doesn't look like we're going to. $60 is going to be the upside target. Looks like it's trying to hold here. So 55, 56, call it. The 50-day is holding as of right now. You have another wick up into there. Maybe that's it, right? Maybe it's done. So let's see what happens. Okay, that's Shopify. If we pull back, look to get back down to 50, 53, 52.75 area. Call it 52. 52 is going to be the target. All right, if we get downside on Shopify. All right, let's see if we can push up here on Shopify, and if it cannot, what happened? I was going to say, what happened there? All right, good luck today, guys. Like I said, I have a few things on watch. Meta 307 is my target. I'm gonna look for a 317 rejection on Meta. Yeah, this is so crazy. Why is this doing this? And real quick, this market can keep going to the upside. That is a bull market coming out of a bear market. Is just continuous upsides, no pullback, and it is so strong it rips your face off. All right. I don't know if you've heard people talk about that, if you've ever experienced a bear market before, but coming out of it, you will just get the strongest rips that you have seen, and pullbacks just won't come. And you'll look back 3, 4, 5, a week, 2 weeks later, and you're up 20, 30, 40 points. In this, from where we are right now, because we're in the 400s, percentages are obviously different than when we're at a buck 50 to 200. You know what I mean? So, here we go. Test of pre-market highs. Rejection so far. Where's Tesla? Let me see here. I gotta fix my stuff real quick. And Tesla's pulling back. Fuck. God damn it. Well, if I can get a bounce. Let's see here. That might be the long. That might be a long shot right there. If you guys have anything you guys are watching, throw it in chat. If you guys see anything with relative strength, relative weakness, we're here to work together as a team. All right, we're here to work together as a team. Let me see if the 200-day has moved here on Tesla. I'm sure it has. Yeah, I figured it has. So, it's a break. I know this was one of the levels I was watching here. It looks like it's trying to hold it again, 212. And it's starting to bounce, guys. So let's see if we try to. Man, I don't want to get my ass handed to me again like I did yesterday, foolishly. Let's see if we can try to take a Tesla short. I'm gonna give this a second because that was the area where it's pulling back from, right? It's pulling back from this previous support. Oh my god. It's pretty strong, so just be careful out there, all right? Again, my target is 205. All right, I'm taking a Tesla short. I'm in a Tesla short, guys. It's already green. My stop will be probably highs a day. That sucks. I wanted to get more. I kind of paid up for it. All right, I'm going to take a piece off right there at 90 cents. Got that was a bad fill. That wasn't too bad. 87, 86.50. Come on, give me the break, and I'm going to take another small piece. This will help me get back what I got yesterday. Give me the break. Just got to watch this area if it continues to hold, right? That's going to be somewhat of a double top here. Yep. That's what I thought, but that's a lower volume. Hold. Just be patient, guys. Just be patient. That is a nice double bottom at that previous support. Previous resistance there. Watch for a breakout to new highs. Watch the volume. Keep your eye on your volume. All right. Keep your eye on that volume. I got a feeling she might go higher. She might break through the highs, guys. But you got to remember about that ATR. That's a tough. I mean, it's hard. It's stuck. We're stuck between these two levels here. You're stuck between those two levels there. This is resistance up here. All right, this is where you want to take a short. Let's see how we react up here. The volume is decreasing as you're getting up to that level. See if it rejects here. What's up, buddy? How you doing today? Shit. How you doing? How are you doing today, bud? All right. Like I said, guys, I feel like if we cannot break back up through this level, just give me 1 second. That's a nice double bottom. See if it works its way back up to 215 and rejects. I mean, you can't. I mean, that's a really nice double bottom there. Let's see if it can see what it does back up at pre-market highs. Let me. Here we go. Is this going to be resistance? We're going to start seeing them step in to take some profits here. Low, open, previous 297. 110 is the high. Days low, 54 cents. Okay, there's a break. It's pretty strong. Let's look to see what the volume is like. There's a break through the high. That's some pretty nice volume there. It's decreasing, though, on that break. Decreased on the break, but that's okay. Where's the 200 day? The 200 day is up at 218. There it goes. She's going to go, guys. Oh, that is a 3-minute chart. Shit. I didn't know I had a 3-minute chart up there. All right. Next resistance level on Tesla is going to be up here at 219, 220 area. All right. Right up there with the 200-day moving average. That's a beautiful double bottom off previous resistance, guys. That was a nice move, right? Double top, bang. You pulled right back to it. Double bottom right on it. Look to take it right up to that 200-day moving average now. Come on. Come on. Come on. Come on. Come on. Let's go. Just give me a pullback. We got the breakout on a 1-minute chart. There's an extension in volume. Pull it back. Just give me a pullback, baby. Just pull it back. Give me that pullback. It's not going to give it to us, I don't think. I don't think she's going to give it to us. Let's see if we have, where are the Qs and the S&Ps? Keep an eye on futures or the S&Ps and the Qs to see where they are coming into. 355 versus 360. Come on, give me a pullback. Give me a pullback. Give me a pullback. Give me the pullback, baby. There we go. I think we do have some data also to be aware of, guys. Come on, man. Fucking hate when I'm not ready. I think you're going for the 200-day, guys. Come on, let's go. What are you watching today, Yanmal? There we go. Get that pullback. Need a pullback. Yeah, 218. 218 is going to be the upside that I look for if we can hold pre-market highs. If we hold pre-market highs, just going to let it do what it wants to do. Watching the Qs here. Qs have some volume coming in. It looks like it's going to try to make one more bounce attempt to get to pre-market highs and see what she does. Whoa, what was that? All right, here goes Tesla with the wicks again. That's hilarious. Oh my god. Here it goes with the wicks. What garbage, man. Ever since the switch with Charles Schwab. Unbelievable. All right, come on. Let's see if we can hold that level and get to 220. Let's see if we can get to 220 today. That's such a huge move, man. It's just really hard for me to try to take this thing to 220. It's like, dude, the Qs are just, yeah, the Qs are struggling. Just gonna be patient here. Is it gonna hold and go higher? Is it gonna hold? Yeah, Qs are pulling back, guys. Um, Here she goes. I think your target's got to be 220 on Tesla. I feel like it's got to be 220 on Tesla, man. The Qs are not looking so great though. The Qs are not looking so great. Look at the volume on the Qs. Maybe I'm looking at the wrong stuff. Shop still holding. PL, no. What else did we have? Roku. Alright, Roku. Trying to head higher. Why are the Qs falling like this? Does anybody have any idea? Meta. And look, Meta's pulled back. Shit, man. Oh, I was watching the wrong stock. Unbelievable. Wow. That's yesterday's high on Meta. I want to see if the Qs bounce around 360, 70. Hey, what's that, boss? One thing? One thing? Now, what is it, buddy? Look at this volume. We can't... Yeah. Tesla's, I feel like, going to be... You know, it's all... Again, it's already ran. What was it? $17, $18? Not, you know... Let me see here. I think the Qs are going to find a bounce here, and this could probably take Tesla a little bit higher. Now, let's see here. Volume is... This is a low volume pullback. Volume's pulling back. Let's see. That's funny. Never trust 1 minute leaves. Oh, come on, let's see here. Let's see here. Come on, baby. Again, 205 is my target. 205 is going to be the target on Tesla if we're really going to get this downside here. Doesn't seem like it wants to get to the 200-day moving average. Here's what I'm watching, though, all right? The Qs are getting... see, they haven't pulled back there just yet, but the Qs... let's see here. That's a break, hold. We haven't really tested 360, 60, or 360, 70 area on the Qs. Oh, my God, my throat's killing me. Alright, I think I'm going to take... Man, I don't want to... I want to short this thing so bad again. I don't have trust in the long to 200. Into the 200-day. I don't. See, you're getting some weakness up here. Let me go to a higher time frame. Again, 220 again is the area. That's 219. Looks like you've kind of went up in there. This is the area I want to see if we can get to. You know what? I might just grab it. The thing is, I want to let Tesla do what it needs to do. And if we can catch a bounce and get back in it up here like 218, but I mean, look at this 15-minute volume too. It's pretty extensive. Shopify is struggling up here. How many times it sat up at this resistance zone? You know, it's been there all morning. I want to get Shopify back down to like 52 into like this low 55 to 52 area. I want to see it pull back below the 50-day moving average. So watch time in sales. See if you start seeing like a brick wall of sellers stepping in here. There's a 1,500 sell order, another 1,000. Look, they're trying to break the wall now. Did you see that? It probably went a little too quick for you guys. They're trying. Look at that massive they're trying to break it. Look, they're coming in drones. And the whole time in sales is just filled up. Bang. There's your sell. Look, the sellers are stepping in now. Look, but buyers are fighting again. There's a big fight here on Shopify. Let's look at the chart to see. Come on. Hold on 1 second. Whenever you say, okay, guys, I'll be back in 1 minute. I just get off your stream and start to see the charts myself. I'm gonna check like 20 minutes. Sometimes you're still not there. No, I've been here for one. I've been here. I haven't left. I haven't left. But I get it. I know. I get it, buddy. I know. I'm sorry. There's just so much. I wasn't even going to stream today. I kind of felt like I kind of just going to stop. I don't know. I need to keep the faith. Try to deliver something decent for people to, you know, go to. But it's really hard to, you know, it's not like to like look at things like negatively. So what happens is like sometimes I feel like I'm doing way too much and I'm not focused on what it is and the job that I need to do, and that is to make money. Because I'm doing all kinds of other things and I feel like I'm not giving my full concentration to where it needs to be. Because again, it's just it seems like there's a lot that goes on behind the scenes, like even just trying to come up with intros and do videos and lessons and stuff. And I'm like, it's a lot. That's all. It's a lot, and all right, so there's your break. I'm gonna use the restroom and I will be back in 1 second. So what are you gonna do, Tesla? What are you gonna do? See, I was just sitting here and there's no decision being made. And let's not forget that we have earnings too that came earlier in the week, like SoFi. I just thought about this when I used the restroom. SoFi's up at that area where it's resistance. That's a failed break and hold up at the 50-day. Because this SoFi trade here, guys, can, it doesn't take much for you to get a 100% trade. Look, it just reclaimed that 50-day moving average, and you're starting to see some bounces. Look at the orders coming through there. Let's see here. I didn't have this on the list, but it is at a resistance level here, right? That is a resistance level. Man, this thing's just gap and go. Gap and go. Oh, man. I gotta find something, guys. I gotta find something. 821 is resistance. Right up here. Oh, come on, man. Man, Meta was the trade, guys. I don't know if it's too late to take it. And I have it written down here. 307, 308's the target for Meta. Unbelievable, man. Unbelievable. God, that makes me sick. I cannot stand missing a trade because I failed to look at it. Concentrate on the wrong. Like, look at this. Look at this setup, right? Pre-market resistance. You have like an ugly triple top, double top, whatever you can call it. 1, 2, right? Pull it back. You break through it. Fail to do so, right? You break the initial opening price. You just boom, 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 and it's just ripping to new lows. But what happens? It bounces, and what's it do? It makes that pre-market support area right there resistance, and they jump short. Look at the size of that candle. And then you get backed up with a nice bear flag, boom, with what? A nice increase in volume. Just, it's a beautiful setup on Meta there. Beautiful setup. See, the thing is, I think I might go back to, usually I'll have a few different screens on here instead of just one. I've been trying to work with different setups. See, here goes Tesla. I had a feeling it wanted to go test this 200-day moving average. The problem is that it's not giving you any momentum. It's not, you're not really moving to the upside. You've went a few points since the opening price. So, man. Yeah, those contracts from 90 cents are now at $1.30 on the call side. Fucking no coffee. What did we have yesterday? mRNA. I don't have anything for that. Look at Moderna, guys. Shopify.
With the New York State Attorney General on sick days, paid sick leave. That UBER Uber.
Come on, let's go, let's go, let's go, let's go. Yeah, Qs are looking pretty weak, but the volume has dried up. Let me make sure that we don't have anything crazy at 10 o'clock. I mean, we have ISM services. Wait, that's Friday. Factory orders shouldn't be too big of a deal, though. This isn't really, it shouldn't really move the markets, right? Factory orders shouldn't really move the markets. Unless it's a crazy, unless it's like a crazy beat or miss. I mean, you got another war that started, so factory orders should be up. technically, right? That's one reason to have them go higher. I'm still looking, guys. It's 10 o'clock now. I mean, the getting's got. I got to get something going here.
Durables X transport 1.4%.
It's just really hard for me to sit here and short Tesla when there is. Let's see. Is now the time? I think I might. I think I might take it. But look, that's that's another reason to go long. There's another long position right there, right? Bang. Unless it doesn't hold it. But this is, if you were to take a long here, your stop is tight, right? Your stop loss is pretty manageable there. You're going to give it 60 cents, right? You're going to give it a little bit of room. You give it 60 cents to possibly make $2, $3. You know what I mean? So that's not too bad of a risk to reward. And again, I'll have the camera on either tomorrow or Monday. I'm so pissed I didn't take this long off that double bottom. After I got out of the rest of my puts up here, I should have just went right back into calls. Unbelievable, man. Nobody is worried about factory orders. Like, seriously, they're not worried about them. You got all the information needed with ISO manufacturing, so. Give me that 209, 210 pullback. I just don't want to be the idiot that tries to get short this name and it just continues to move up to that 200A and hold. The Qs just kind of stopped moving, unless that's my computer. We're just consolidating here. All right, it's time. Come on. Especially if I get a bounce. I'm going to look for a bounce on Tesla to see if I can get up into this area here. It's not going to give it to me. They're going to fucking take this trade away from us. Oh my gosh. They're going to. It's going to fall out of bed. What I'm looking for is the 205 puts. There's a reason why I'm looking for 205s. God, it's going to go. It's going to go. Support, resistance. Alright, I took a position there. I'm going to give it another little bit of room. I'm going to give it stop loss. Just watch. Now the Qs look like they want to start bouncing. Oddly, right? Oddly enough. So Qs are holding that pre-market level there. They could try to bounce. Come on, let's go. So far, we're in the money, guys. You could have taken a piece off there. Let's go, baby. Let's go. Let's go, Tesla. Let's go. Bang. Take a piece off there, guys. Nice. Nice job. That's a nice trade there, fellas. Nice trade again. There it is. That's all we need. That's all we need. Bang! Look, you can see I took my whole trade off there, guys. I had to take the rest off once you've seen that bounce. I still think we get another. I still think we get another entry. I'm going right back after it, right here. We're just gonna do this. Come on, give me this right here. Watch that level. Watch this level here. See if you can get your 9 EMA. Look, there's your 9 EMA, right? See if you get your 9 EMA. As an entry point there. I'm still looking for the bigger move too. Because now you're getting a double bottom, right, off of pre-market highs here. Right? So right now you're getting a double bottom off of this area. Right? You broke through it, test it. You're getting some buyers. Shorts took profit there. That was the profit area to take. And you seen how you got that tail off of it? See how we broke through it and then quickly reversed it? That's a sign. So if we break this, you can look for the retest of this area and look to get it back down to the low of day. On a short on Tesla, guys. And the good thing is I have those whatchamacallit. So they're still up there, 41 cents. Still weak. That sucks. I'm going to have to start paying up for it. I'm watching this area here on Tesla. What a nice trade. What a beautiful trade. That's a failed break above pre-market highs. Wait for the bounce back. Right? You're going to get VWAP, 9 EMA up into this area. And then I'm going to look to hold on to this trade. Well, look. Well, wait. Be careful because the Qs did just drop down into that level. The Qs could find support right there around that 360, 70 level. Right? And then you want to wait for see the Qs are bouncing. You want to see if the Qs start to reject 361, the base. Right? Let me show you what I'm talking about. I mean, look at that flat top resistance, guys, right here. All right? You're going to look right there. Is where you're going to look. And look, it just broke right back above it. It's rejecting it now. It's rejecting it. Look at the volume. Right? Just there. Right there she was. Okay? You just got to watch. Now you're going to sit between this level here because you have this level here to contend with, right? That you bounced off of. My level's a little lower, but you wicked right off of it. You pretty much wicked right off of that area. Boom. Look at the volume. See how the candle's going down? But look at the volume. It's not even moving. Right? Look at that. See it moving? Oh, there you go. You got a little smudge. Right? Chances are you get a nice little reversal there. It's trying to pick up. But just pay attention. The reason I like to use 1 minute is for the volumes, to see where the volume really is. There it goes. It's trying to break. But look, it's breaking on smaller volume. Be careful, right? There's your level. Look at that reversal. Look how quick it jumped right off of there. 360. That's the level I just drew for you guys. That's the level I just drew out. Right? Right there. Let's see if it breaks it. Oh, look at that selling come in. Look at them fight right there at that level. They're trying to hold this. Bears are trying to hold this for life. They're going to give up. Where's Tesla? That's a nice break and retest on Tesla again. I just gave you guys the plan. 90 MA VWAP. Right? Broke. Boop. Let's see if we can bring it down. See if we can not get above that level and get back down to low a day. I'd like to get these puts cheaper. I really would. I would like to get these puts cheaper again. I don't want to pay back up for them. Damn it. You got a small support level down here at 212.97. I'm going to be patient and see if it can give me I want to see if it can give me a little bit of a bounce back to like, there we go. Yes, I want the bounce. I want the bounce. And look at the tails that are coming in on the cues. Come on, give me 214.50. Watch, guys. Just be careful. You That's what I mean. Look at the volume, right? The high volume of the day is to the buy side. This was a really nice double bottom that I really regret not going long. That would have been a beautiful trade there. I need Tesla to go higher so I can get puts cheaper. Again, I'm really aiming for that 205 mark, right? I'm really aiming to get down there. This is what we're looking for. 214.50. 214.50. I would like to get an entry up here, but look, man, it's just going to wick right into it and then reject it. Sometimes it's like that. I would still look at this as a bullish ride up to this area. All right, I'm looking. You know what? You might be able to get 215.50, guys. We might be able to get up here. 215.50. That's where we need to reject. This is where we need to go. I wonder if I could scalp along. Dude, the cues are just falling out of bed, guys. And look, it's doing the thing. See what I say? So if that's where I want to try and take a short from that 215.50 to 216, right? This whole area right here. Like I want to see it like reject that area. If it continues and we pass by a lot of time here, of like 215 and we just can't seem to get above it, then that's, then there we go. Then I'm just going to stay short minded, especially if the Qs can't find a bid. The volume's to the downside on the Qs. I just feel like, where are we headed to? Is the question. I know I'm watching the wrong stock, and Tesla isn't paying. Tesla's not giving us any type of momentum. 356. All right, so that would be a nice bounce to like 361 on the Qs on the 15-minute chart. Hit that 9 EMA. 9 EMA with after hours and pre-market is right there with that pre-market resistance level. It was resistance and then it became support. So 361.16 area, and there you go. There's that candle for Tesla. All right, and when I do these charts, like you don't have to be sure. You can take a long to this area. You can scalp a long off of here, and you're seeing it break. It holds, right, and it's holding VWAP, and bang, there you go. You get your candle, and I'm just sitting here telling you guys now, hey, look for the Qs to bounce. There we go. Look, bang. Look at time. Yep, there it was. 132. Come on, give me one more bounce up in there. Give me one more bounce up here. I missed my entry there, but it's whatever. I think the Qs will get a bounce, and that could send Tesla to the 200-day, so be aware of that. The volume's to the buy side, guys. Don't get short. You do what you want. I'm not telling you guys. I can't tell you what to do. I can't tell you guys what to do, but if the Qs start to bounce, you could just see this thing start to edge itself up to the 200-day. I don't think the Qs have enough upside to get Tesla to up there, but Tesla can just do its own thing. Made some small money. Let's see if it pulls back here and holds this level as support. Small pullback, or a low volume pullback, right to this area. Tries to make it support. Now this is your range. Now this is your range. This is where you want to see support come in. Right? This is where you wanted to see some support come in. Come on. A little bit further. A little bit further. Give me a little bit further. Let it go. Let it go up. And there goes the Qs getting ready to turn back around, guys. That's probably a good short right there, 29 cents. Tesla could go sideways, so I don't feel comfortable entering this thing right now. 29, 30, 28, 29, 27. All right, she's just going higher, see? I think that's it. I think this could be... I just don't see how Tesla continues and continues. I guess it could, but I don't know. I guess because you have a lot of people that are short. Let's go back and look at the chart.
coming up at 10:30 a.m. Eastern Time.
Let's see what's going on here. It's just such a huge gap up. I don't know who is going to go attempt a long here. So if we look at this, it looks like you see all these wicks. I don't know if they're real, which they're not real, and maybe this one, maybe that one, but looks like you broke up above that level, and now you're holding those wicks, and you might want to try for that 200-day moving average again.
Chuck Schumer says the Senate will work on its own bipartisan emergency aid package that
Okay,
includes
so
Israel and the Ukraine.
Qs look like they're getting a low volume bounce
A
back.
federal funding bill on Israel.
All right, I'm gonna go look at a few other names.
LMND, lemonade, new highs now up 38%, $15.24. Lima Michael,
SoFi. Okay, SoFi's pulling back. What else do we have? What else do we have? Roku. Alright, so there's an area. That was my target for Roku at 75. Hitting it right on the money. 75.50, I'm sorry. What did I say? Does anybody remember what I told you guys for these type of earnings? Other than the setups? Didn't I say that they were already sold off? And you could see these things catch a bid? Right? You could see these things trade to the upside. That we were watching all the other stocks that were already up near highs get sold off on decent earnings. But you could see names like Roku. I don't know about DraftKings, but like all these names that these type of like mid cap tech names, or like they're large cap tech names, but they're not mega cap. Um, these large cap tech names could go to the upside. Like they're on their lows, right? They're near low of the they're near the low of the year at that. Um, and I just felt like Roku. I don't know I don't know where Shopify was, but like Shopify, right? I felt like some of these were your names, like Roblox. I don't know if they reported yet or not. These are some of the names that, if they report good, you could see a bounce. You could see them start to really bounce. Um, so yeah, that that's that. And Microsoft is just beast mode. Microsoft is beast mode. Where are you going, Tesla? Like, seriously, what are you doing, dude?
JP
What are you
is
doing?
looking to hire 1,000 new business bankers by 2025. Give me a Papa Michael.
See if it bounces here. mRNA. Man, I want to find a killer trade, guys. I'm telling you, I'm yearning for it. yearning for it. Let's see what the spy's doing here. Where are we at here? So, oh, PayPal was the other one. That's right, PayPal. PYPL. It's pulling back. I wonder if there's a lot of people that are selling this because they have the opportunity to. Alright, see if the Qs get a bit of resistance here. See if you see a bit of a pullback. That could be a double top on AMD. I don't know why I'm trading Tesla. It's not doing anything. Oh man. Unless it's gonna bounce. Yeah, it's gonna bounce off of that area. But let's see if this is resistant. See if it can't get back above here. I'm gonna show you what I'm looking at on the Qs. Alright, this is what I'm watching for. See this double top? See how it pulled back and it held this level right here? Right there. See how it held that? Or really this? Right there. Right, you go up, pull it back, it closes and holds, goes up, pulls, bang. See if it becomes, this area becomes resistance again. Alright, if you struggle to get through here, it didn't struggle. Just pop. Damn it. Let's go to a daily chart and see what we have going on here. Damn, we're already, look, we're just like right there at the fucking 50-day moving average already. Already. In 2 days. Right? 1, 2. $14 in 2 days. Not even 2 days. It's the morning. So pretty much, you know, like 48 hours. Not even. I don't know. 1 day and 2 nighs. We haven't even got through the day. And it's already at $14 higher. It's already at the 50-day. Yeah, this could be a support area for the Qs, guys. You see this pivot low, right? Breaks down, bounces, resistance, breaks down. Now you've broken up above it. You look for that to hold. What is next? The 50-day moving average at 364. So, and then what else do you have there? What else do you have at 364? 364.50 is a gap fill and a prior support and resistance area at 364.50. 364.30 is where it's at. Where it's at. So, right there. Yeah, it's at 364 actually. No. Yeah. I don't know. Yeah, support. Bounces, bang, resistance. Gap up, boom, 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 boom. I don't know. I'd have to zoom out. Let's see here. Yeah, we do have resistance up at the 50-day. It's a prior support area. This is actually the... Man, I don't like... It's like, I like the Q setup, but I don't. And I hate the SPY setup, but I don't. Like, the SPY on the daily looks a lot better than the Qs, but like a 15-minute chart, it looks better on the Qs than it does the SPY. So, this is the area that was... that support area is up here at 435. Let's see. Resistance is at 430. I think 430 is the area I'm looking for. And what did we say? That's taking us right back to the prior Fed day. taking us right back to the prior Fed day. So there's your leader. The Dow is your leader, right? The Dow's the leader. Qs are actually lagging, and Qs were leading, right? The Qs were leading. Now they're lagging. So keep that in mind. Rotation, rotation, rotation. Look at like so down names. If you want to be long, look at down names like Boeing, Home Depot, Microsoft. His conduct leading up, he didn't do anything. All right, everybody was nuts on January 6th, and he didn't physically do anything to anyone. All right, just because somebody tells you to do something doesn't mean you do it. All right, so yep, it's going higher. Looks like Tesla really wants to. Oh, look at that though. Look at this volume that came in. All right. Um, what is that? 62. Let's see if we can get a pullback here. All right. Man, I want to grab these puts 28.50. Let's see if I can get them a bit cheaper. I don't want to just like jump in the way of this thing and it not move. Um, Q's could find some support at 361.21 would be the area. I have Tesla puts up. Like I have the order up. All I got to do is touch the button. Um, I just want to be able to get momentum. Damn it! I should have did it there. It'll probably give me another opportunity if I get in. Um, I'll let you guys know. Yeah, let's see if we roll it over here, right? Look, boom, hedge. Let's see if it tries to get back up. It already just tried it. Oh man, come on. Yeah, I think that's it. I think it's showing you that it's going to go down. Um, wow, I could have just got in there at a cheaper price and I just missed it. Um, I want to give the cues a minute. It feels like we're just trading sideways. Feels like we're just going to sit here, trade sideways.
The Fed has said they need below trend growth, but what does that really translate? So we're going to get the jobs report tomorrow. I think we have about 170,000 jobs expected. What is below trend
Yeah,
growth?
it's struggling to go down. If I get into something, I'll let you guys know. Tesla's just still sitting here, struggling. It feels like I want to get short again, but I just don't think it's backed up with enough volume until you get up to this 200-day. Right, that's really where they might step in. I still think it needs to pull back. It's ran so much. It's ran $17, $18 from yesterday. That's a huge ATR. So if I find something, I'm gonna type it in chat. I'll come on the mic and let you guys know. I'm just looking for setups right now. It's 10:30. Oh, it's almost 11. I've taken 2 trades on Tesla, both winners. Not any home runs, but let's see what happens here. It's kind of just the Qs are just trading sideways, or were. Nope, they're going back to the upside. So just giving it a couple minutes, guys. Trying to find something. I was looking at the wrong names. Right. I should have looked at Meta today. It was on the list. This would have been a beautiful trade this morning. That right there is a beautiful setup, and I missed it, unfortunately. So there's the bounce right back into Fed day. Those blue boxes are Fed days. This is unbelievable. Unbelievable. I just get fucking pissed when I don't put a trade on the day before that I told myself, man. I said that we're going to the upside. I said it yesterday. Um, I mean, the trend had changed, and I tried to show some members and why I was thinking that. It's like, I don't know. It is what it is. I'm gonna get a bite to eat. Qs are struggling up here. They've made a hell of a run. Just I guess I'm gonna have to take the 2 trades that I've taken this morning and kind of stay with those. And if something presents itself, I'm still looking to see if I can get a pullback on Tesla. Looks like it wants to start to try to do it, but watch out because it could just bounce. Let's see what we got here. Let's see what happens here on Tesla. I think it feels like Tesla could start to roll it over now, right? It feels like it could start to roll it over, but it's hard to say though because you could just find support right here at 4215. So just be nimble. Don't just like trade just to trade. Just make sure you have a setup and like you know make sure what you're seeing is worth you trading. Make sure it's worth your time. So it's a nice double top off of previous support resistance area right here. Double top, swing it back, double bottom right on it, and that's a setup there, right? A long or a short, right? Right off the bell, um, or that the bounce up into this area and make it resistance. So let's see what happens here. If it doesn't bounce here and like try to get support to go higher from here, um, I just don't know if we move. We could just sit here and trade sideways all day. So there's a couple things I'm looking for. I'm looking to see what it does at this price. There's that bounce. Like I said, I had a feeling it was going to try and just give you a little bounce there. Look at the queues go, guys. That's insane.
The entire 2025
That's insane.
so that means Ferrari is sold out at least for the next 2 years. Interestingly, hybrid cars outsold combustion engines for the first time ever at Ferrari. Vinny is saying they now actually have a prototype for the first all EV Ferrari. That's going to be launched at the end of 2025. And as far as racing, Sarah, I know this is important to you. Vinny is saying clearly, quote, we need to keep improving. But the business
Brutal. That would have been a nice little trade on Meta. Brutal. I wonder if this gives you how much. Man, I don't know. You know, it's already down. It's only down 0.5%. Could be one of those days on Meta. Just don't know if you get continued weakness or not on Meta. Let me look at.
FTC said that Amazon Project Nessie has cost American
I
households
was looking to get down to like
$1 billion.
307 or so.
Complaint that the ACN
Or even just get to like the 50-day moving average, which is down at 305. Wow.
S&P futures up 64.50 now just off the highs.
305. Yeah. 308. Yeah, 308. That's where I'd like to see Meta get to. I just wish we could get some damn continuation here, man. Tesla's not doing anything. Doesn't want to do anything. Um, I I can't go long. I don't think there's much long left in there like Roku. It's I mean, you're above that level now. So your next level on Roku's up at like 79, 50. So maybe don't fight the trend and look for it to go higher, man. This is nuts. This is seriously crazy. 78. Unbelievable. Guess there was a small gap. Man, this is crazy. I don't know. They might be overweight, guys. I don't know. I'm getting really frustrated with the way that I've been trading lately, and I gotta fix it. I gotta fix it. I should have just went on for my long yesterday and not fought that. Um, let's see here. Let's see. Let me see if we have a pattern playing out. It's like Tesla just not giving us any momentum. It hasn't done it in weeks. In weeks. Hold on. Give me the. I should be able to still do it on the 1 minute. Is that the breakout? Is that there, right there, where she gonna break out? Look at the fucking cues. Excuse my language. I'm sorry to cuss, but I just, man, like, I mean, we said 360, 29. I thought it was going to be around 360, 70 where it would find support on the cues, but good thing I didn't stay in those shorts on Tesla. I gotta find something to trade, even though it seems like it's too late. What's up, Chris? Sorry, buddy. I didn't see your message there. Still, wow. If that's way too loud, just let me know. Sorry about that. Come on, is that going to be a failed breakout? Come on, Tesla. Come on down. Anything you got your eyes on today, Chris? I shorted Tesla twice. Should have taken the long. I didn't have enough strength. I didn't have enough belief in the long. As much as I do to the downside. It's not that I think it'll go down. I just feel like, to get a pullback. I was trying to trade more so the pullback to bring in some longs. But the Qs are just unstoppable. SPY, unstoppable. So, a lot of the trades were just taken from us. It is what it is. That's trading, If we didn't go long yesterday, like look at that hold. Looking back at the Qs, I was watching the SPY. I wasn't watching the Qs. That is a really nice hold. The SPY, we looked at that level yesterday. Matter of fact, you called it out, Chris. You called that level out yesterday. That was a really nice hold yesterday at this level of pre-market highs. Should have taken a long off of that. I just didn't have the faith to do it. I don't know. It's not that I didn't have the faith. It's just I looked at them and they were $80 a contract. I'm like, I'm not paying $80 a contract. And I'm
Some
talking,
commentary from Barrett Gold CEO.
and I'm talking in the afternoon.
Barrett Gold CEO says not interested in acquiring First Quantum Minerals despite recent plunge in share price.
Wow, this is a lot here that they've written down. Wow. The equity news, impressive quality. Okay, so they're just. Yeah, so sorry if that was too loud.
And just for retail names, do note National Retail Federation says
loud,
it
just let
expects
me
US
know.
holiday sales to rise between
It's a
3 and
squawk
4%
box.
during the November-December period this
So
year
yeah, they
compared
were
to
like
last
over
year.
$80 in the afternoon to take a long for the SPY into today, and I'm like, I can't do
Looks
it.
like we're getting
I
some
can't
comments
wake
now
up
from
to
ECB's
have a
DeCoste
call
as
that's
well.
$80. It
Does
goes up
repeat
a
it's
few
too early to
dollars,
be
and it's
speaking
worth
about rate cuts.
25, 30 because it didn't go up enough. You know what I mean? Break even the next only above 5. Microsoft understood it 2 now. Yeah. Listen. Do yourself. Try to do this, Chris. Like right now, like the SPY's pulling back, but I still don't have enough faith that it's like, yeah, it could probably get here, right? It could pull back to 428, 427.96, 428, right? Oh, okay. But now it's going to, right? It's going to start whatever, but that doesn't mean that it can't like bounce and just take forever and take all day to get down here. Dude, what is going on? Something's going on. Hold on.
More from DeCoste says high uncertainty means decisions must be data dependent.
All right, where's Tesla? TSLA. Shit, and I don't have that up. What am I making money on today? Wow, that's hilarious. Shit. Give me 1 second. Let me look around. Yeah, see, it's gonna bounce there. It's gonna suck people in. So I feel like Qs are the weakest of the bunch. You can see how they're just barely over. They were the leader the past few days, but as of today, they are the laggard. The Dow is your leader. The Dow is your leader. It's just, you can see how far, it is, and then you're going to have the SPY right there with it, and then the IWM was red. Or no, it was like, when I looked at it, it was down here. And the markets were up, so even there, like, look, the IWM just put in a lower high. What does that mean for the Qs? Um, we'll see. Maybe I want to see Tesla pull back. I think I might start getting in this Tesla trade because I feel like it may be the risk to reward might be worth it. I mean, those contracts are cheap now. They're so cheap. It wouldn't take much to get 100% on these. Um, we're in the 200-day again, and I'm just looking for like a pullback. Like this could be the level up here, 1975. Um, like so we did pull back here. I'm just looking for a damn pullback. Like we have a huge gap there. Let it keep
Commentary
going,
from
guys.
Israeli PM
And the farther
Netanyahu says
Tesla
Israeli
goes
troops
up,
have
I'll
pushed
let you
through
guys know
Gaza
if I
City
do put that
outskirts.
position on. I might have to do it now while it's down at $20, $18. And those are the 205 puts. Is what I'm looking at. That doesn't mean it has to come down, but it's like the risk to reward on those. It's like, we're getting up to that 200-day moving average. We're getting up here. They can always become cheaper. I think this is a reversal. I'm getting in it. I'm taking it now, guys. I'm in it. I'm in those puts. Sorry, I know it was kind of quick. I got filled at 19 cents, 18.50. I got filled at 18, 19. Okay. Again, Tesla can still go higher, so I'm gonna wait and see what I can pull out of this thing. My target, I just, I'm gonna try and hold on to this contract as well. I bought a few of them. If I start to get profit, I bought 5 of them, just because I don't want to start giving back what I made this morning. If I start losing money on this, I'm gonna keep my stop tight because I don't want to give back what I made earlier. All right, but if I get like a nice move down to like 215, 216, and we get like a nice pullback, I will be taking profits on these. And you guys should do the same. Keep your stops tight. There's no reason to stay in trades if it's not working for you. I'll let you guys know what I do with this though.
There's more from the NRFC, noting that overall household finances do remain in good shape and will continue to support the consumer's ability to spend. The commentary from the National Retail Federation CEO says overall household finances remain in good shape and will continue to support the consumer's ability to spend. And there's more commentary from the NRF chief economist, says consumers remain in the driver's seat and are resilient despite headwinds of inflation. And our commentary from the Shell CEO says over the next 6 to 9 months, they do expect to drill another exploration well, appraisal well, and flow test in Namibia.
I mean, again, 220 is our area. The high 219s, 220 is that area. That is your real resistance level.
And there's more from the NRF chief economist. Does expect spending to continue through the end of the year on a range of items and experiences, but at a slower pace. And just more from the NRF, just noting that to meet demand of the holiday season, they do expect retailers will hire between 345,000 and 450,000 seasonal workers. So some commentary from Canadian Natural President, C&Q in Canada. It's noting that consolidation could happen here in Canada as well, in response to a question on the recent large E&P deals in the US.
All right, I'm gonna go make a cup of coffee real quick. The coffee should be done. I am, and I'll be right back. Looks like it's gonna gain some ground here again. Keep your stops tight. Don't get yourself killed on this trade. Again, look, the trend is to the upside. The reason I'm putting this on is because this is, to me, a reversal pattern. It's not wedged up enough. I feel like though, um, an ascending wedge. It's just not doesn't seem like it's up at like a high enough wedge. But I'm gonna try it and see if we can get a reversal pattern and get this thing back down to
So
like
just some Treasury block
215.
trades. It was at
Ultimately, like
11:03
210.
Eastern Time.
210 is the level I'd like to look for tomorrow.
13.4k in the 2-year deck
That
23 at
we haven't
101 at
tested
12 and
that
a half.
level,
That's compared to
so
the another
that's where I'm looking
5.6k
to try
block
to get
in
this
the
to.
Ultra 10-year at
Your
110
real
at
resistance
26 and a
level is
half.
up
This is a
here at
talented
210.
flattener.
219.70s to 220 is the real resistance level.
And also another block trade about 10 minutes after that at 11:14 Eastern Time. About 8.1k in the 10-year at 107.17 and a half. As you're aware, on the energy front, do know Israel is reportedly exporting 70% less natural gas since its shutdown its Tamar field, according to a report via BDO. It's being picked up by Reuters. So this commentary from Eli Lilly, just noting the progressed efforts to bring the triazolapide to patients via different delivery presentations outside the US, like single-use vials and multi-use pens, and do anticipate tight supplies of incretin products, which will persist while additional manufacturing capacity is operationalized. And Eli is also noting they do expect additional internal and contracted manufacturing capacity will become fully operational around the world in the next several years.
If you took any type of puts, you know, you're going to get a bounce back. We're waiting for the pullback, but this area 215.50 is going to be an area of support. I haven't taken any profit yet. I haven't taken any. This is something I kind of want to like try to hold on to. Um, if anybody on here is trading options too, remember time decay. You know, even if you buy stuff out of the money, you know, and it's not there, it's still going to lose value. All right.
Seeing the latest bill results from the US, does sell $96 billion in 4-week bills at high rates of 5.29%, cover ratio 2.91 times. And also for the 8-week bills, US sells $86 billion worth at a high rate of 5.3%, but the cover ratio 2.7 times.
It's nice being able to. It's nice being able to identify that reversal pattern, right? It just doesn't give you a continuation.
focused on geopolitics. The Wall Street Journal is reporting that Russia's Wagner Group may provide air defense weapon to Hezbollah, according to US intelligence, being cited by the Wall Street Journal. The US has intelligence that the Wagner Group, the Russian paramilitary group, may provide an air defense system to Hezbollah, the Lebanese militia, according to US officials cited by the WSJ. A bit further in this article does suggest that one US official said that Washington hasn't confirmed that the system has been sent, but is monitoring discussions involving Wagner and Hezbollah.
All right, so you should get a bounce back, right? To retest it, this is going to be the area. See what happens here. All right, it's normal to get a bounce back. I wonder if we try to back up with a few small calls. This would be a resistance area. It's like, it's an area again. Boom, boom. It is kind of resistance here. Man, it's like this whole level. Let me pull it. Let me pull it back just a little bit here. All right. I know it's small. Yeah, so it's got a little room. Let's see if this will be. Let's see if this is the tipping point right. No, I'm gonna try and get it perfect. right there. Let's see if that is our tipping point to a, bit of resistance, and just pull it back a little bit to try and bring in more buyers. You want to see it pull back to bring in more buyers. If we're really strong, it should give you more than one chance to buy to get long, right? It should give you, if it's going to be strong, it should pull back, consolidate, bring buyers in to go higher. And whoever is long, again, this could be just more so short covering and stuff like that, and then buyers just on top of it. But on top of that, I'm gonna hold on to this Tesla short just to see what I can do with it. Again, you got to watch time with these. I've got it way out the money, so it's the the closer we get to tomorrow, the more it's going to start losing value. I just don't know what's going to bring us down, unless I don't know if we get news or what it is. So I got the cues over on the other screen. I could pull up two screens for us to do it. But yeah, I mean, yeah, yep. That's all. That's all I have. Just know the dangers and the risk involved. Nice. What's it doing? What's Microsoft doing? Is it still being like? Is it still on beast mode or? I'm gonna go grab a cup of coffee, Chris. I'll be right back. I wasn't sure if you were still here or not. Um, I wonder if we can get man. Um, I wonder if See it pulled back. That's a nice dip buy right there on Microsoft, getting it in this area here, that little pocket. We still haven't tested. Like, I would love for the non-farm payrolls to just come in like the unemployment's just bang at like a freaking all-time low. We're at like 2%. Oh my God, the Fed's higher for longer. And these Tesla puts Tesla's back down at like 180, 200, like 180 in pre-market, and it's down like 80,000%. And I made $70,000 off of $300, $200. It's like what I'm rooting for right now, right? It's something good, right? People are working. Non-farm payroll comes in really good, really hot. Like unemployment rate is just like ripping. Nothing wrong with that. That's cool, man. I mean, you know, Tesla's down. It's people are going to cover their positions, but I'm just like the only reason I'm putting these puts on small, and it's a small position, is because like I feel like we need to pull it back a little bit. Like if this market really wants to go higher, we need to pull it in. And I'm going to say this now. If non-farm payroll comes in hot, this market will be right back to Fed Day. It'll be right back to where we were yesterday, I promise. Unemployment data right now is the most important thing, right? As long as these inflation numbers stay where they're at, you're not going to hear too much about it. But if we get like a really good non-farm payrolls tomorrow, the market's not going to like it. And the market's going to sell off. And it's going to say, okay, the unemployment, the labor market isn't softening. It's still really tight. You know, the Fed has to get the labor market to soften in order to be able to slow demand, right? To really bring inflation down to 2%. So maybe I keep these on for tomorrow. That's what I'm thinking. The Qs are kind of topping out up here. I just think we've gone, and just because you think we've gone, like me saying like, oh, I think we've gone too far too quick, like that's not a reason to put a trade on. That's not a reason to be short. You know what I mean. So, what's that? Microsoft. So what are you at? Calls, puts. What we got going on here? What are you looking for? Here could be your support. This could be a minor support area. Watch the Qs. The Qs don't have support though until you get down to like 361.79, and we're at 362. So this could find some downs. This might be this is pretty much like the Q support, like right here. You know what I mean? I'm not sure if you grabbed calls or puts or what you got going on. I wouldn't even be trading Microsoft right now. It's trading sideways. This thing's moved. Its opening price was $346.99, and it's at $347.50. I mean, unless you're scalping it looking for a dollar move, you know, like me, I'm an idiot playing Tesla that's not even moving. It's not even moving. It's moving in the opposite direction of my trade, as a matter of fact. But for some reason, I'm still up on them. Nope, never mind. I'm down 10%. Ah, shit, I had to reload. Okay, well, I'm down $1 a contract. If that's not adding, it's not adding in commissions either. Okay, never mind. Hold on, I'm back up. Somebody just got filled at. Oh, never mind. Never mind. I thought that was my bad. All right, so we pull back. This should be our rejection area right here. This is where we should see some sellers step in on Tesla. Might take Apple off. Oh, Apple. I thought you were talking about Microsoft. I'm sorry. I thought you were talking about Microsoft. I'm going to go grab a cup of coffee real quick. Is that still the 50-day? Man, look at that tail. It's a pretty decent tail there. You know, the thing is if like if let's look at Apple to see if we can kind of see what they're going to do this earnings. Again, a lot of their movement though has been from Fed Day. It feels like they might not do too well. I don't know, especially pulling back here. Hold on. So they made it. If they can, if Apple, I don't know, because a Fed Day yesterday. Would kind of like mess with the price a little bit to not really like, you know how we like earlier we were getting like these vibes that like they were selling before earnings and were buying into it. Apple's gonna just, you know, it's a stock that's being bought all the time and traded all the time. It's pretty liquid. And with Fed Day, pretty much Apple is the market. So probably won't be able to tell through, you know, the few, you know, a week or two worth of trading what they think about the earnings. But I tell you right now, with that long tail, if we start to bring it back, I don't know, man. I mean, if we pull it back and start holding at like 173.89, maybe they do okay. It's in a downtrend. Look what happened last time, right? Let's not forget what happened last time. All right, this is what happened last time. It sold off. Remember Roku? Remember what Roku did? They killed earnings. Roku killed earnings. That's why I was bullish on some of these names. Because they're sold off on the lows and they reported like they shouldn't be there. Right? Look at the last earnings. Bang. Look what happened this earnings. Bang. Shouldn't surprise you. So it shouldn't surprise us if Apple has not so great earnings. Do you remember what this was, Chris? Do you remember what it was about Apple that brought it down? Was it like sales? Was it? And look, what did we just do? You just rejected the earnings day of last quarter. You just went right to it and made it resistance. Look at that. There's your earnings. Or that's the day after earnings. Sorry. Oh, the earnings is right there. Never mind. That's the earnings low, I guess. I don't know. That would be the earnings low, really. It would be down here. But you just went right into that prior support level and just made it resistance. So hopefully that'd be cool if it helped Tesla out a little bit to bring it down. Man, that sucks. So it didn't hold the 50-day moving average. Yeah, it's a nice rally. And look at it, just pulling back on low volume too. I'm really curious how we end the day, guys. Really curious. It's already lunchtime. I'm going to go make a cup of coffee. Looks like Tesla wants to bounce here. And there it went. You know, I'm going to try to hang on to this thing as much as I can. If I start getting down to like 10, like, you know, do I give this like to 10 cents or do I give it to like 15? Or do I stop out? See, the thing is, if I just sell now for a small loss, it's going to be pulled back and I'll be like, God damn it. God damn it. God. Like, I always do that, you know. I just want to see if we can get a pullback. I just want to have a position on to get a pullback. That's all. And maybe I'm not in the right name. That's another thing. When we go to trade, guys, we need to think about what names we're in and what the direction of the index is doing. So maybe Tesla isn't the brightest one to be short. Maybe it's your Apples or like your Amazons that are coming off of those highs. Um, Tesla is coming off of the lows. So maybe I've got it backwards. We gonna be all right. Let's do this. Let's do this. What's a spy? What's a spy's bitch ass doing? Little bitch ass spy. It's been a little asshole lately. Spy's been little B word lately. I should have listened to myself. Well, never mind. I did want to be long yesterday. The thing is after I noticed Monday and Tuesday, the way like the location that the buyers were buying, I was like, okay, I need a pullback. And I never got it. I never got that pullback. I was looking to buy here. If you were with us, you would have seen the sign. The sign said buy here, and it was right in there. I put that sign in there. Come on, guys. Let's bring this market back down. Please, let's pull it back. Let's go check FinTwit. You know what? I'm going to see if... Like, this would be an awesome place to pull it back to. Like, get a nice dip buy. Bang, 425, and then get the long. All right, I'm going to go grab a cup of coffee, and then we'll go explore the internet. What was ruined by rich people? My puts. All right, Chris. Let's see. Look, like I was saying this morning, that bear market rallies, like especially when you start really coming in, it's going to rip face. It will just go and go and go and go. Just like my puts that are down 20% now. Hallelujah. Yeah. Listen, man, do yourself a favor. Don't be like me, number one. Number two, think about where it is that you're trading and why you're trading that specific stock. Right? Like look at EMPH like this right here. Right? This has got some liquidity, it looks like. It's got some nice movement. Microsoft and Apple, like maybe Apple's better played tomorrow. Maybe Microsoft's better played tomorrow after Apple earnings. So just think about where your location is. I mean, listen, I can, try and say all that I want. And I try to help myself out with it. I try to do the same, but, I just think, should I be shorting Tesla? I mean, they underperformed big time, They did. So if the markets pull back, maybe I can get a pullback in Tesla. You know, so. But yeah, you have a great day, Chris. Have a great day. I'll probably be stopping out of these Tesla puts in just a little bit. I'm going to give it some room. I don't want to stop out yet. Because this pattern here is telling me, right? I'm expecting a bounce back, but I don't like that it held. I don't like that it held 217. So, you have a good rest of your day, though, buddy.
Let's look at the US 30-year fixed rate mortgages via Freddie Mac. It's at 7.76%, down slightly from the prior week, 7.79%.
Well, the tone of the tape is what was my tone on Monday when I talked about earnings. I said a lot of these stocks that are on their lows, like Roku, Shopify. If you don't know what I'm talking about, I'm going to show you what I'm talking about. I'm talking about my guy right here. Downtown Josh Brown, my guy.
Last couple of days, nice
We
bounce
said this
or pop
before
or
it
whatever
happened.
you want to call it, off of the lows for probably anything with a sub $10 billion market cap, anything that's been red all year and losing you money. That phenomenon is helping the Russell 2000. That gives you better internals, makes people feel better. Combine that with the strength that we've seen in tech off of some pretty good earnings. And that's the tone of the tape right now. And what's cool about what I'm talking about, it's not a one or two day phenomenon. In fact, TLCs, otherwise known as tax loss candidates, actually tend to outperform the market from the whole period, November, December, through January. Again, a lot of selling pressure comes off, and what's left? People looking through the rubble and saying, these stocks, this has been overdone. The whole Russell 2000 has been overdone.
Let's see if we can get a pullback on Tesla. I got to order out for 18
Gary,
cents.
how long does this last, you think? I mean, the Russell's up, to Josh's point, near 2%, and it's been crushed lately.
It might hold
But how long
here.
does this last?
All right, so the market's up about 4% from the bottom here. The market fell off 11%.
All right,
Can
hold
it get
up.
back
It
that
just
whole
got
11%,
hold
which
on.
means
So they're
it has
filling
to
them
go
at
up
18.
12 to 13%.
got
That's
an
asking
order
a
there.
lot, but I think certainly that the market can keep
Hit
going
my order,
higher.
baby.
We
Come on.
know that inflation has continued to come down, and we expect that the number is going to be reasonably good. The next CPI number, good meaning coming down a little bit further. We're
Damn
not
it.
in a recession. There was so much chatter about recession.
Pull it back.
And we're
Pull
not
it
there.
back.
4.9%
Hit
was
my
the
order.
GDP number.
Hit my
And
order.
We also know that this
Pull it
war
back.
in the Middle East, which
Why
people
wasn't that my
last
order that
week
got
were
taken out?
very
That's
scared was going
bullcrap.
to escalate to other countries, that hasn't happened yet. So you add up a few of these positives in addition to the bounce, the technical bounce, and I'd say that we can get the S&P 500 to go up another 5%.
Hit my order.
I mean, it was
Hit my
like 10
order.
minutes ago, we were like, okay, S&P's approaching 4,100. It's like 4,105.
Moment of truth.
And then here we are at 4,300.
Yeah.
See how that
To your
happens?
point.
Here it
so are we
goes.
saying, are you guys
Shoom, shoom, shoom,
suggesting,
shoom.
Carrie, that
Shoom, shoom,
you know,
shoom, shoom.
because the recession's
start
not here,
selling.
and we still may have one,
Yeah,
and
maybe.
it may come in 24, that the runway is okay for stocks, even if we think a recession is going to happen, just not anytime in the next few months?
Yeah, well, here's the way investors could think about it right now. Instead of
Shoom.
3 weeks ago saying
Hit me.
to themselves, wow,
Yo,
I could
why
get
isn't my
5% sort of
18-cent order
risk-free,
getting filled, bro?
and
There it was.
that's
It got banged.
very, very comfortable.
Yes.
The market collapsing the way it was in September and October.
All right,
Now
so
they're
I got
saying,
rid of some of that
I can only get 5%.
order.
5% is
That
my
order.
ceiling.
See if
and
I can't get
want
it at a
more
lower
than
price. Look, I got
5%,
lucky, guys. I
with
got hit on
most
that
of
tail
the
there.
market,
They came
the
down and
S&P
ate it
500
up, baby.
unweighted down
They came down
2% this
and
year.
hit them.
You can do better than
Hit them
5%
orders that were
if you
sitting
take
there
some
like, yo,
risk and
come
buy
on,
a
bring it
handful
down,
of
bring it
stocks,
down,
a
bring it
basket,
down.
or
Boom.
the index.
And they
So,
cleared them
you know,
all out.
Jimmy, Jeffrey
Got rid
Gundlach,
of them,
course, every
run it
Fed day
higher.
is with us right after Jay Powell finishes the news conference. Was with us yesterday.
Man,
he
I
says a
hope
bond
somebody
rally has
that is
started,
new
and you can
just
see it
see
obviously
what I just
showing up. But
did
he also said
and
stocks can do well.
understand
I want you to
what
listen.
just happened there.
I've been negative
I
on
still
the
think
equity
we could
market
pull
for
it back
several
a
months,
bit.
but just a couple of days ago, I observed
But-
that the S&P 500 has fallen all the way down to its trend line from the low
was
in
a very low
2020
volume
up
pullback.
through the low between now and then. If you just connect those low points. And the S&P
no
500
longer
came down
in
and
the
met
Tesla
that trend
puts.
line this
We are
week.
no longer in them.
And we're sitting right on it. So with this relaxation in
That was a
bond yields,
beautiful
which has
limit
obviously
order.
been a problem for the stock market, and this trade location on the S&P 500, I
Pretty much
certainly
flat
think
on that trade.
this would be a
I'll
poor
give it
trade
some time.
location to be a seller.
If the market wants to pull
Okay, there's
back,
the
I'll
Bond
pay up
King
for
saying
it. We'll
poor
see what
location to be a
happens. I'm
seller
not
of
giving
stocks.
back what I made
I mean,
earlier
it always
today.
catches your ears and eyes when a
Because
bond
what I made
person
earlier
says
today
it's a good
helps
time to
what
buy
I ruined
stocks.
yesterday.
That's a high hurdle to clear.
Now we're still
I wonder
on-
what Jeffrey
on
would
a
say
green
today
track. So
if
the
he saw the
100% trade
productivity
on
numbers.
Monday.
And I know sometimes we talk about productivity. It's very
Small loss
esoteric and
yesterday that I
arcane.
just about almost gave back. I got back the majority of what I made yesterday, so we're good. Limit orders, gotta love them.
Except for last year at the end of October, just after the market bottom, they all told you it'd get worse. But in a year where the market's up double digits, going into November 1st, you're not a seller. A, you have typical seasonality on your side. B, you had a particularly difficult year for active managers, given the fact that the only stocks went up were the stocks that were underweight. So you know there's chasing. This is not chasing like, oh, I guess I'll chase the S&P. This is like, if I don't chase the S&P, I have no career come January because the redemptions are going to take me out of the seat. You don't sell Mariah Carey, okay? We're in Mariah Carey season. So if you're worried about like, oh, is it the right time to sell? I don't think it's right now. I really don't. So unless something materially changes geopolitically, which of course is always possible, I don't know. It's Druckenmiller versus Mariah. I'm going Mariah. This is where we are in the year. This is what happens.
But see, Stan, since you're pointing him out, he's not negative in the very near term. Like, we're really having a conversation in two parts.
Yeah.
One is about the remainder of this year, and the next is what comes next. It's the what comes next that worries the likes of Druckenmiller, which even though Gundlach says, yeah, stocks can go up now, it's what worries the Gundlachs of the world of what comes next once we get into 2024.
It concerns all of us. Druckenmiller was having the same conversation with us all, figuratively, in 2010. This is the riskiest time I've ever seen to be an investor. And then the market compounded at 14.5% for the next decade. So we all are worried about the big picture and the national debt, et cetera, et cetera. Yeah. It's not to dismiss that. What we're talking about right now, though, is what's going on in stocks. Typically, this time of year, coming off of a double-digit rally in the S&P 500, I think at this point, the ball is in the Bulls' court. We'll see if they can run with it. There are a lot of negatives. I'm not from like a wacko from Disneyland. I understand. Well, there were some issues. All right, we all understand that. Nobody would deny that.
That's why we're talking about a wall of worry, right? And stocks, historically can climb a wall of worry. Exactly. One area that is ripping today, regional banks. Bill Gross, you see this tweet from him calling a bottom, says, quote, regional bank falling knife has hit a bottom. By the way, he's going to be on last call tonight, so you don't want to miss that interview. He says he's buying Truist, Citizens, KeyCorp, Carry, and First Horizon. Right. Let's show those stocks, and you can show the whole complex for that matter. It makes no difference.
This is that tax law selling phenomenon, though. Yeah, very much.
So I would say that regional banks are part of this phenomenon today, which could be small cap, mid cap, anything that just has not
the biggest
at
part of
all.
the Russell.
Yeah,
I'm
is
sorry to
financial.
interrupt you. Financials.
Yeah,
The
yeah,
bought back
exactly.
deal. Yeah.
So if there's going to be some move in stocks that are other than the top 7 or 8, it's got to include financials. It's a big category, and there's many names, and they sell for multiples that are range from 8 to 11. So I think that's a good call, but we don't own any of them. But we own plenty of stocks that haven't moved and should be moving because they're putting up good numbers. And today is a day I have a feeling that we're going to see a big percent up in terms of the entire S&P. These breath days are very important. We don't have enough of them. We need more for the whole rest of the year.
But these were the third rail stocks, right? Coming up market. Now there were moments in time where you were willing to play in some of these, right?
Where'd you
What
go?
about now? What about now? Do we still need to be worried about the regionals, or is this in fact the bottom, as Mr. Gross suggested?
Where'd you go, Turkey?
By saying this, pick your poison. Okay. By that I mean this is a good time to take on some risk. All right. Josh went through the.
Just give me 1 second, guys.
wonder where those puts are at now. Again, I'm just going to wait, see if we get some type of momentum here in the afternoon. I want to thank you guys for hitting the like button. I almost didn't stream today. I thought it was a little frustrating that excuse me, that like a lot of the move was taken away from us today. And I didn't think we were going to get momentum to the downside, like
growth,
to make it worth
not
it.
great. Earnings per share $1.39.
You know, I didn't think we were
Let's
gonna have a
assume they'll
reason
hit
to
that.
sell
They're
off.
pretty good at doing that. You're only getting
now tomorrow,
1
non-farm
week
payrolls with
of
Apple
iPhone 15
earnings.
sales
I
in
may
this
try to
quarter.
put a position
and
on.
Q4 is traditionally
I just
Apple's
don't know,
biggest
though. I
quarter
think
of the year.
the holiday
So
quarter.
I think that
I feel like,
what's
you know, we
really
know
gonna
why the
come
market's
down to,
ripping and
people
roaring.
are
It's
going to
because
want color on October.
it just believes that
iPhone,
rates are done.
Maybe not unit volumes, but
But
like
that don't mean
what's
nothing.
going on. And if you get confirmation that all is well in some way, shape, or form, I think it's good enough for Apple.
I will
given
say
the fact
this.
The stock's already in a 10%
Again,
drawdown.
last night I tried
that's the wild
to make a
card. Let's
watch
bring in
list and I
Steve
fell
Kovac.
asleep
He's
3
live right
times,
now.
guys.
Outside of Apple
Like,
headquarters,
it
as he
takes me
awakes like
forever
we all
when I'm
do,
sick like
those
this
numbers. And you know, I know you
to,
listened
like,
to that
just do
interview earlier
anything.
this week on
And-
Closing Bell
'cause
with
I have no
Eric Woodring
energy.
of Morgan Stanley, who hasn't
And it
outperformed
just,
Steve on the stock,
you know,
but
so
is concerned
I do
that guide
apologize.
for
I
the
did try. It
holiday
was like
quarter is gonna
10:30
be
by the
lowered.
time I was like got everything done. I'm like, all
That's
right.
exactly it. Look,
Do
I
I
know
record
Josh
it and
wants
put it
Mariah
out,
Carey
and it's
for
freaking
Christmas, but
11
all Apple wants
o'clock at night?
is return
You know?
to growth for Christmas. And look, that's
So
what
I
we
had to
got to
run to
listen
the
to.
pet
Don't
store
worry
yesterday,
so
and
much
when I
about the
got
quarter
back
that was,
and got all
guys.
the
What we
levels and
really need to
everything
listen to is
ready,
how
it
the
was
holiday
pretty
quarter is
late.
shaping up, and we just don't get that until the earnings call. CFO Luca Maestri
sorry about
will
that.
likely guide, you know, how many percentage points of growth or
Excuse
not
me.
growth they're seeing. The street is looking for
Beyond,
about 123
BYND,
billion
guys?
in revenue for the holiday quarter. But look, the
BYND.
comps aren't just easier or
No, not
different because of that
neon.
extra
Neon.
week that Josh was talking
BYND.
about. It's also, remember,
Wow.
it was a little
Holy
over a year ago
shiz.
now, Scott, that they
This
had
thing
to
was
shut
getting ready
down
to squeeze a
iPhone
while
production
ago.
in China because of those COVID policies by the
Foxconn
government
shit.
there.
I
So
forgot about that
the
with
comps are
Apple.
going to get a lot easier. So it's much easier for them to return to growth if they give any kind of indication that there isn't a return to growth or the growth
Wow,
isn't
look
in
at that
that kind
volume
of
on Beyond
5%
Meat,
range.
guys.
Then there could be
This stock
some
is going to be on
cause
my
to
watch
worry.
list.
But look, there are a lot of headlines.
This is
over the
added
last
to the
several
watch
days.
list
We've
'cause
seen
we do
analysts
have
start to kind
room
of trim
up
their
to
holiday quarter
750.
estimates. And that's because of all these headwinds we keep hearing about coming
It's
out
up
of China, the
18% on
Huawei
the day.
competition coming back online, and Apple having to compete for this.
Did
people
anybody
who
play
once
this?
switched
That's
from
on the-
Huawei and
on the
Android
live right now?
back
Did
to
anybody see
iPhone.
this or play
Not
this?
to mention just overall demand
guess I'm late
slipping
on
in the
Beyond.
United
I heard
States
talks
and
about
China.
Beyond
And
earlier
sure, they're going to talk about
this
growth
morning,
in those
but I
emerging
never
markets
checked it
like
out.
India, like Indonesia. But the question becomes,
Let's see
can that
here.
grow fast
Let's
enough
see
to
if we
kind of
can,
make up for the softness we're seeing in those more mature markets? Probably not. The question
something
is when that happens. But it's going to be an easier holiday quarter,
help
Scott,
us
for them to show growth.
determine where
All right,
buy
good
and
stuff.
sell
Steve
points
Kovac, thank
would
you very
be.
much. Enjoy the day. We'll see you because I know you're going to be very busy later on. Carrots, it's an interesting phenomenon going into the number. So a week ago, it was
this
like,
is
all
not-
right, the chart looks
Not
terrible.
where I
Yeah.
would take
The stock
fib
is
from,
on a
but
downtrend, which normally doesn't happen going into an earnings report.
Correct.
Well, lo and behold, here we are, 6% higher than we were a week ago.
Yeah.
So now we're at 176.5 going into earnings.
I'm looking at
What do
it,
we think?
yeah. Yeah.
I'm looking at it.
Well, I'll tell you two things. One, I don't think it's going to be as bad as the fears that are out there about Apple, and Steve just described all of the concerns. I mean, China, weakness, this model, competition. I don't think Apple is as important to this market that we're experiencing than it has been as important to past markets. I think they can have a quarter that people say, "Shh, I guess that was, you know, the best they can do. Maybe the stock will go down a little, 2%, 3%, or up 2 or 3%.
Yeah, I
think
mean,
that?
it's got room to $8
Why
on
do
the
you-
daily,
why do you think
guys.
that?
Because what's driving this market is not Apple right now.
But
Apple is really
let's
not been a
see.
factor
Let's see
in
if
this,
more
in this
people
rally
start
this
talking
week.
about
Nasdaq's up 5%
this
in a
name.
week.
I understand that,
5%
but
a week.
lots of the market is good. Look at the movers today.
You're not
We're
getting 800 Dow points without Apple being involved.
all right, but I think the market
Man,
can
I'm
still
happy
go
my
up without
account's back
Apple
to
having
where
a
it
good
is. I
quarter,
was
is what I'm
getting
saying.
worried there
Well, I
I
don't
think
know.
there's
Do
a
we
lot.
agree with that? Do we agree with
No.
that? Those
Well,
are fighting words.
Well, I mean, go
Let's see
up
here.
like, could it trend higher? Yeah, it's not going to rally without Apple and Microsoft. Mathematically, it can't.
Well, okay, but Microsoft
was
had
looking
a very good
pullback
quarter.
on
Amazon, I mean, the numbers
VIX.
have been
Oh,
reasonably
it didn't
good.
hold
I'm
it.
saying
This
I
is
think
the level
number
I was
will
looking to
be
hold on the VIX.
acceptable. I don't think the
Was
numbers can be
17,
terrible or
but
great, and the market can continue to go higher.
Let me correct myself.
Whatever.
If every
I
person
don't know.
selling
Might have
Apple
to just
because it's
come out
down
with a new game
puts their
plan.
money into United Health,
What do we
yes,
have next week? Has
Dow can
anybody
go up.
looked to see what we
well,
have next
yeah,
week as
okay,
far as
thank you,
data and
thank you,
stuff?
Professor.
Is there something looming and something
that's a
coming
controversial
that
statement.
I know,
We
and
haven't-
I do, and
I'm
it's
gonna
similar to
look
what
real
Joe and I
quick.
were saying a couple days
You
ago.
guys
We
wanna
were asking,
join-
you were
join
asking
me.
us what's the biggest things facing the market, and we said Apple isn't it. Listen, with Apple, this is just don't mess it up. I mean, that's the favorite advice for me to receive and the favorite advice for me to give, only the word isn't mess.
What does that mean,
But
don't
here's
mess
what
it up?
it means. Here's what it means specifically. Don't come out of the blue with something that nobody's expecting.
Using these seasonal
Don't tell
things.
us about some
But
supply
if
chain.
we fail to really make new, like break
Let me
out
know
of
if
this
this is too
downtrend that's
loud,
really
guys.
started in the last few weeks, then I think stocks are going to have to reflect the reality that we're probably heading into a slowdown next year.
Yeah, it is interesting. I'm not a huge believer in the technical analysis, what I call the squigglies, but it's true. We're still technically in a down channel, right? For whatever it's worth, on at least the S&P. I want to get your thoughts on the higher for longer dynamic as it relates to currencies, because I think it seems clear that the ECB is not going to do the same higher for longer type of path. All right, Lagarde is probably more likely to lower rates than not much sooner
Sorry, I
than
just hit my desk
Powell.
and the
How does the
monitor's
currency
moved.
side play into this? Because if the dollar were to keep strengthening against the euro because of just interest rate differentials, that's going to be still tightening without the Fed needing to tighten.
Yeah, no, I mean
That's what I said yesterday.
long-term rates are going to at some point stall out here, but even the front end can only rally so much until the Fed cuts. So even like we're only going to get so much like additional kind of financial conditions benefits from that. And let's see, again, I don't want to make too much of the last 24 hours. We do have auctions next week, and we have a lot of supply ahead of us, and this whole liquidity issue that I'm still concerned about going into year end. But then on the dollar side, yeah, I mean the Fed could probably hold out the longest until something more materially happens in the U.S., whereas it's going to be challenging for the rest of the world. So this is when you get into this kind of dollar strength vortex, and the dollar is still super critical in the plumbing of the world, as we know, and any further moves from here, because like the view, everyone starts to like get into this logical framework. Well, look, rates are not going to go up any higher in the U.S. and or they might go lower. Dollars should go weaker. If the macro is getting weaker in the U.S. and globally, it's been weak already, then the dollar probably stays stronger, if not strengthens, because others are going to have to ease first before the Fed does. So I do think that the dollar move probably is not over yet, and usually it has that kind of last laugh and that big final move higher, which then is the tightening, which the Fed cannot control. And then they have to react to that as well. So those forms of tightening are still with us, and I don't think they go away. And yeah, so this is again goes back to the whole waiting game. Like, what has to finally get their attention to have them change direction?
Has there ever been a start of a recession where the dollar is from a starting point as strong as it has been? I mean, I can't recall of any time historically where that's been the case. I might be wrong.
I mean, at some point you would think the dollar will pick up on that, but this is, I think, we're reacting more towards the mechanical and the liquidity aspect of the dollar. Let's not forget the Fed is doing QT. The banking system itself is now not growing like before, so there's actually less there. And if you look at overseas dollar availability, that's also been declining. So I think this one is unique considering the massive increase of liquidity that happened right after COVID, and now that we're in the draining process, you could still have. I most likely think it actually amplifies the recession. In the past, when things were much more simpler, like you would see either economic data getting weaker, you would believe it, number one, and then as it started to kind of come to fruition and broaden out in the economy, then you go into the pure fundamental framework of, the U.S. is weakening, therefore
Oh shit! I
dollars
think I
gets
turned the
weaker.
mic off.
I think
Never
this time
mind.
is different because of the structural features and how the setup was coming out of COVID with all this liquidity. So I think that the dollar probably won't just roll over that quickly.
So I think it's been well documented the inversion of the yield curve, the streak of that inversion, and now the steepening. And again, most recessions tend to happen shortly thereafter the steepening really does begin. Is there any chance that we can
The
avoid a
S&Ps are
recession? I
up
mean, I
just
there's no
under
signal that's perfect,
2%,
but
guys, or a
the
percent and a
steepening
half,
part of
just under
this,
a
I think,
percent and a half.
is a little bit
It's
ominous.
insane, isn't it?
No, I think there's been a number of studies, and once the steepening turns, it's hard to avoid the recession. Now, listen, like because the inversion was so deep,
I wonder if we start to make another leg up.
it's like this. What we and I know,
I'm
and
really
those that are
curious.
listening, the bear steepening, which is when long-term rates rise faster than short-term rates, that's kind of rare. Now that you can say, well, we live in a very unique situation, a different world than before, a world of heavy supply, in a world where overseas rates are increasing after years of being super depressed at either zero or negative rates.
And let's
That
see where this will
perhaps
take
the
us.
paradigm is shifting enough where long-term rates can, disinvert the curve. Now, completely steepening it, I'm not there yet. I think you would need to have an even bigger fiscal problem on our hands. And again, if that were to happen, I'm not sure how that's positive for risk assets anyhow. I think that you could still go back to the
It
idea
takes you
of
back. So what I
once the
was
curve
looking at too,
moves
guys.
out
Oh, never
of
mind.
this
From here.
inversion, crosses over and starts to steepen, still
I'm
probably
going to
a
use the
good
bathroom.
recession
I'll be right
signal.
back.
The only caveat being that we're coming after 15 years of low rates / QE to a world of heavy fiscal supply. That's probably explaining a portion of it, but I don't think it's enough. But from here on out, though, the curve would have to start steepening from short-term rates, and that's why it really comes down to the Fed.
Yeah, and that's something you often don't hear too much about. That further steepening has to really come more from the short end, just because there's been so much damage already on the long end. I got to tell you, I also don't buy the argument that it's like yields are going to keep skyrocketing further and further on the long end. I mean, housing's already largely, you can argue, at a standstill. And I think people forget that technology still means that the economy is largely more efficient than it was in the 80s, right?
Yes.
So technology is it's economics 101, right? There are shifts in the yield curve, right? And it's not more than just sort of the yield curve itself moving, in terms of long and short end. The entire shift happens, which is the bear steepening or bull steepening. So, and technology is a driver of that. So that hasn't changed. That should still shift anyway, the yield curve, you would think, more left.
Yes. So we're now at that inflection point, and that would argue for rate cuts in the first half of next year, right? And I in my forecast have that. I mean, I have it with a little bit of like the possibility of it getting pushed back, but we do have the term bank funding program that comes due in March, that most likely gets extended. But during that time period into Q2 next year, the Fed can start cutting rates. That would be assuming they don't hike again, which we don't think they will. July was the last hike. That's 9 to 10 months into the future. The Fed's cut rates in the past like that. They don't wait 12, 15 months. They don't have to wait 12, 15 months. In between that time period, given what's going on with the banks, I think that the curve has to start steepening here. That's really the real savior for the banking system. It's going to need to be. It needs a steeper curve.
But that wouldn't be a savior necessarily to housing, right? Because the housing will still be based on the 10-year.
That's right. That's right. I mean, tens will lag that move, but yeah, and I think that would probably the window will be lost by then anyway. It really would come down to can mortgage spreads tighten fast enough in the beginning of the year. But still, I think that the damage is done for housing at this point because the Fed's they're not going to react to cutting until they see proof of either really big job losses and inflation collapsing, which could happen in the next 6 months. I think that's a higher probability than most people think. But they're going to wait to see it. They're not going to just jump to it and start cutting proactively. And so while you're waiting, it's going to be at the most inopportune time for housing because rates are just going to stay elevated.
Just to reset the room for the remaining 20 minutes. Sorry, George, for interrupting there. Everybody, please make sure you follow George here on X. If any of you want to come up and ask questions, click that bottom left mic request button. And as always, this will be an edited podcast under Lead Lag Live. So you mentioned with MEFG, Japan-based company, and I keep on hitting on Japan as I think myself, I could be totally wrong, being in a crisis given the yen, and every time it seems like the BOJ has the bond market under control, there's another unscheduled bond buying program that takes place. Relate what's going on with Japan to the U.S. and Federal Reserve policy, because I keep going back to, if there's going to be some kind of crisis that sends risk assets lower, it probably has to be something coming from a part of the world that the Fed can't necessarily preempt. Maybe I'm wrong on that, but I want to hear your thoughts on what's going on with Japan and its monetary policy.
I mean, look, I'm partial to that concern as well, but not necessarily from the Japan lens, but in general, the whole dollar strength. And let's remember, we have the highest rates in the world for U.S. and a lot of companies and countries around the world are impacted by this higher U.S. rate environment. So I do think that there is a risk that we might get surprised by some sort of unknown out there. Like it's going to come from a foreign market, not necessarily the U.S. as the first kind of salvo in this risk off that I think will build up over the course of next year. Japan specifically, though, I mean, they're unwinding policy, right? And after many years, right? And so there's a kind of give and take between what's happening in the U.S. versus Japan on many different fronts. The biggest ones are the Fed was the first mover and really aggressive and hiked rates a lot, and that really created that big interest rate differential. It's had a big impact on the currency. So it would really help if U.S. rates went down. That would give a helping hand to the BOJ in many ways, right? If rates in the U.S. decline and they don't, Japan doesn't have to really adjust rates as much, that would help out, would relieve some pressure on the currency. So there's kind of this give and take going back and forth. I don't think that's what's driving policy per se, but nothing operates in a vacuum, and currencies are pairs, right? They're relative to each other. So I do think that the Fed staying on hold for longer makes the BOJ's job harder, and if the Fed were to kind of be forced to cut sooner, that would kind of relieve some pressure. That's my own personal view. And what BOJ has been doing up until this point is like gradually just unwinding all this ultra accommodative policy. Our view is at some point they're going to have to, and at that point it's approaching very quickly, that they're going to have to completely do away with YCC. But then I kind of think, really like 2 or 3 steps down the line, and this is just me just thinking off the cuff here, that it would be ironic that one day the U.S. might have to do YCC and Japan is removing YCC. But that's a whole topic for a whole other day. But I do think that the window for them to navigate could potentially get wider if the Fed stays on hold, or close if the Fed starts cutting. How do they do it? So I think this, being the last mover of removing policy makes it so tricky for how Japan, handles their rate policy and currency policy.
That would blow a lot of people's minds if the U.S. did yield curve control and Japan gets riveted. But like we often talk about central bank credibility, and I get it. BOJ owns the entire bond market, right, and it also owns ETFs that have exposure to Japan's stock market. What would the implications be of credibility of the BOJ being threatened? Because let's face it, they have never really had to deal with a situation like this.
Yeah, look, I think it's not just the local issues; it's also bigger from the potential macro, which is why you have to slow walk this thing, about just leverage in the system and access to cheap liquidity over the years. The idea of the yen carry trade and how that helped out a lot of emerging markets. So this is a very big one. So you have to really think it through, like how it could unravel. And BOJ, of course, really focused on their own local domestic needs and wants. So I think it's has global implications from just the Japan angle, but then when you couple it with the U.S., not to mention on the U.S. side, I mean Japan being a very large buyer of U.S. fixed income. So like all these things are intertwined. It's a very delicate dance, and I think which is another reason why, like, there's, at some point,
So
you
right
can't
now I'm
keep
going to
U.S.
see if we
rates
can find
curves
some type of
inverted
like
forever
funny
and
ticker names.
rates this high,
Like
because we also need
GSX,
foreign
right? They used to
investors
be
to come
that
back in and
Chinese
help
thing.
us
I don't think it's a
with all of this
thing
debt load.
anymore. Oh, it is. Tech Edu.
Well, that's the thing
This thing
that's
was
interesting
hundreds
to
of
me.
dollars.
You've probably
It
seen a
doesn't
lot of
trade
those
anymore, I
charts as well.
guess.
You look at the
That's
percentage of
crazy.
holdings
HKD,
that China has of treasuries
HKD,
and
Hong
Japan,
Kong.
and it's been in this kind of steady
What?
decline. It's like, all right, well, at some point that yield does become pretty
All right, let's see
attractive.
if
I
we can come
understand
up
they
with
still have to
something.
do something on the currency side, but I look at all those charts and say to myself, okay, we're probably at a juncture now where the foreign buyers actually start kicking up purchases. They actually that those trends reverse.
Yeah, but even there, it's the same thing like with the regional bank story. You need a steeper curve to make the carry work better. And it's like if you look at these percentage of outstanding holdings of U.S. versus the rest of the world, I mean, there was a real clear shift, really after Basel III and all the banks, being required to hold treasuries, and look at what that did. And now post COVID, I call it the domestication of the U.S. bond market. People don't like to believe it, but that's exactly what happened with the Japan bond market in the late 1990s, early 2000s. When rates were attractive enough and your equities aren't going anywhere, guess what? You buy fixed income. So I think that like the U.S. bond market's always going to get funded, right? I have no issues with that, and especially if rates stay elevated and the curve eventually re-steepens, I think investors are going to realize that you're going to have to come back to fixed income, because you're going to look up one day and say, I could have bought at 5%, they're now back at 3. And I think that's going to start to come back into the bond market. Like this fear of it's going to go to 7 is the wrong way of looking at it. You should think about like you immunize and start to really build some decent cash flows in the risk-free rate, plus not to mention really high quality corporates, munis. This could be a gift. We'll see.
Yeah, I don't disagree. I think it's the reminder that the U.S. government can't default, right? I mean, it's obviously the higher yield, but yeah, I keep emphasizing I myself am bond bearish, but for different reasons. I'm bond bearish because of credit risk, right? I'm kind of corporate credit bond bearish.
Yes.
Just because if we are heading for a recession, right, you should see. By the way, you should see. I mean, you're starting to see a little bit at the margin, but you should see credit spreads really widen. And usually, when it widens, it happens very aggressively, which is why I keep saying slowly, then all of a sudden. It's been a while since I think investors, traders have been reminded that the reason why U.S. government debt is considered the pristine asset is because they've got the money printer, and you're going to get a return of capital.
Yes. It's always the willingness to pay, right, and or the ability, right, and so, and I think the two sometimes blend. And with corporates, they don't have that, right? I mean, some people could argue, oh, really high quality corporates have a version of a printing press through good governance as well as products that they offer and services, but at the end of the day, the currency is still under the government's guise. So I completely agree with that. I mean, you mentioned like the whole sudden versus stop. I mean, it reminded me of the other thing that, which is related to our current economic backdrop, which is like the U.S. consumer, which like they shop until they drop, and I'm kind of concerned about the upcoming holiday shopping season, and then what that means for 2024, and everyone having to pay their bills for the first time at like 20+% interest on consumer credit. So I am kind of concerned that like all this stuff is like
Walmart's
coming to a
flipping
head
the
where
script,
we're all
guys.
running
Look
really,
at
really
that.
fast, and then there's like a sudden stop, almost
Yeah,
like an
she's
emerging
ripping to
market
all-time highs. It
when they
looks like,
lose
guys
capital. When they lose like
and
capital to
gals.
liquidity, emerging markets
Guys
have
and
like this
gals,
gap
all-time high.
risk. I'm wondering if the consumer
Walmito.
has the same issue. It's tied back to
Walmarto.
the small businesses. It's tied back to
El
corporates, that you're
Walmarto.
going to have this big widening of spreads consumers can't afford,
El
and then you just have
Walmarto.
a typical recession, and that really puts
El
retail in a really tough spot.
Wal Martinez. No, I'm just kidding.
Yeah, and I mean I keep going back to you look at the retailer stocks, right? XRT as a proxy. I mean, all that agrees with you. They have not been in the bull market whatsoever. So
to keep an eye on.
There's an interesting disconnect
as far
between
as
the narrative
sector
of a
making
strong
new highs
consumer
of the
demand
year.
pull inflation and the stocks which are supposed to be benefiting from that.
Yeah, 100%. Even like we talked about housing. The housing ETFs rolled a little bit, right?
Yes,
bank stocks aren't doing great. It's other than the select
know.
Magnificent Seven, right?
Come
like
on,
the stock market doesn't act like as if it's a new bull market or in line with a really robust, sustainable, organically growing economy. we pump in a lot of liquidity, yeah, you can
That's
kind of have these
hilarious. It's up
spurts.
14%, but
But
at
really, a
all-time
sustainable
highs.
recovery. I mean, my view in general has been that we
Cruise lines were up
elongated the
150%
2019 or the
on the stock
2009
alone.
2019 economic cycle. Once we got through the forced shutdowns and COVID, we elongated that business cycle. We never really took care of the malinvestments, and
Hot
now with these
damn.
high rates, those malinvestments, like you mentioned
Mama.
the zombies at the
So
beginning,
Alibaba,
I think the zombies are going to have a hard time next year.
Has there been anything
nothing.
surprising to you
This day is
when it
getting
comes to
boring
the bond market in
real
terms of how you
quick,
thought things
guys.
would play out at the start of the year
Real
versus
quick.
where things are now?
Anybody see any small caps? Anything?
Start versus the middle
Is
of the
there any,
year different in the sense that
I don't know. I'll be right back.
we were more pessimistic at the beginning of the year, but then once we saw the debt ceiling resolution, the amount of debt that they had to do, we quickly retooled and got more into the kind of the bear steepening view. I think what's really surprised me has been the credit market and the ability for it to actually tighten in this world, right? So like we've seen credit spreads actually narrow. So that's really the one major call that we got wrong this year. The spreads tightened more than we had thought. We thought they would be on a widening, anticipating the macro that we just went through. So it's been really credit that surprised me the most.
Yeah, I mean it's been one of the most incredible disconnects. I do wonder, because a lot. I think you can correct me wrong on this, but I think a lot of the kind of triple C junk issuances also are tied to commodity plays.
Wow, look at
So
regionals,
to the
fam.
extent that commodities have been
Hot
strong, you maybe
damn.
argue that's part of the reason. There's also the argument that
So
there's just
I
not that
guess
much
when
junk debt out
rates
there. That's not really
go,
true because
so
more and
this
more
is
things have
this
been
is
rated to lower
the
quality in the bond market
this is the
broadly,
thing.
right, over the last several
Okay.
years. So
Usually
I do
when
wonder
TLT
if that
goes
still
down,
remains sort of the real
banks
big
go up.
canary
When TLT
in the coal mine, so to
goes
speak.
up in
Yeah, no, I mean, I think
price,
the composition of
banks
like what's coming
come
to market, that's
down.
definitely
But
true.
not
And the
today.
shift more towards like leverage loans and to other
This could
forms of
be a
financing
trade.
could
So
also be what's buying more
how
time.
do I say this?
But at the
Like
end of the day, if you like the whole
technically,
definition of the zombie not
by
being able
book,
to
if you
pay
guys can hear me, unless this
for
thing is
interest
too loud,
expense from
by
earnings,
book,
like that
when
matters because
when
again,
rates
this is
go
why the
higher,
Fed waiting game is so critical.
banks
Like
should make more money.
who's going to move first?
They should.
If we're going to
They
see
should.
your cash
Does that
flows
mean they're
eaten
going
up
to?
by
Not
all your
really.
interest expense, at
But
some point you
technically,
stop
on paper,
expanding your
they
business,
should.
and then you have to start laying off people, right? And I think that's the part of the cycle that people don't want to believe is coming, but I think
was
it is.
a you
What's
could
the other? What's
have
the
a trade
optimistic
on
side,
like a
right?
carry
So
trade
again, we're all
for
assuming
like
recession.
TLT and
I think
banks, right?
probability's
Because they're
favored.
inverse to one
Okay, all
another.
this, but what's the optimistic side? I mean, aside from the idea of Powell was able to kind of thread the needle.
So you can see it's
What
down at
could
new
happen
lows.
either from an exogenous perspective or internally that just makes the economy rip back and
But they're
have
kind of doing
GDP
the
more
same, I
be
feel
about
like.
growth and private sector
I don't
activity
know.
than
I just noticed that
inflation
they're
and
up.
public
Regionals
sector.
are up.
No, look, you had to
Maybe
play
that's a good
the other
thing
side. I
for.
agree
Let
with you.
me
And like I've
actually, you
been
know what, guys?
trying to
I
challenge
didn't look at
our
this.
house
Maybe this could
views
be why.
around
Maybe it's down.
what if we're wrong and
You guys think
what
it's down or
what
up?
would
What's
that
your
take,
guys' guess?
like
Down or
completely
up?
wrong in the macro medium term outlook.
Up or down? Down
And
or
that
up?
I think
Up or down?
really
We're about
the
to
Fed
find
again
out.
would need to
We
start
finna
to
find a
pivot here,
out.
and I don't think what
October
we saw
5th.
yesterday
It's
is a
not.
pivot. It's more about them drawing
Come
the line in the
on.
sand that they're going to be
We
on
want
hold
the
for as long as they
data.
can. So like
Looks
they would
like
have
it
to get
came down a
proactive.
bit.
I don't see that happening yet. A much more coordinated effort out
It
of
should
China,
be
and
for
that's a big maybe. I mean, China's a whole
November
other topic we could spend a
1st.
whole hour on.
Why
So,
is this data
and like what
lagging?
happens there? Like, I mean, there was so much hope at the
Oh
beginning of
my
the year of the
gosh.
China reopening, and of
Fed
course it didn't
blog,
work out that way.
relative
So,
resources.
if China's able to somehow get
Okay.
its
What?
act together on easing and restructuring real estate and its
There
the
we
banking
Oh, is
system over
that
there.
it?
That's a
No,
big one.
they
So
don't.
it's a
They
big
don't have it
maybe.
up
It
yet.
would have to be China, and it would have to be something so structural. And of
Sorry.
course, like some sort of peaceful resolution to all these ongoing
All the
wars, which is
banks
a
are
whole other
sounding
topic. So
resilient.
a lot of those things just to me seem really
Let's see
unrealistic at
here.
this point in time. Or will they come
And then
soon enough?
up.
Eventually,
And
hopefully they do happen. I just don't think
let's
they're
hope
going
it
to
doesn't
happen
go too
fast
much
enough
higher.
to catch us
We should
from
get
dipping.
yields to pull back,
So
which should
I
help
think
this
it's going to
a
be
little
hard
bit.
to
Yields
see that
pulling
happen.
back should help
I
that out a
guess
little bit.
people say, well, George, like fiscal's going to keep spending like there's no tomorrow. I was like, okay, but there's a
Here
concept
we
called
go.
rate
We
of
got it
change,
right
and
here.
the idea that you have to outdo what you did the
All
prior
right.
year. I just can't see how they're going to be able to beat this year's spending in an election
Give
year,
me a
where I
4
think
hour.
the Republicans will probably try to hold back spending throughout 2024. So I don't think that we accelerate in spending next year. So it's going to be hard to beat the comps of 23. Maybe China, and just organically at 5% plus rates, you don't accelerate the economy from this level of rates. Maybe at 2 or 3%, maybe we can get an upturn. But this is how stifle the economy and take away the oxygen, and you slow it down. These rates are just too high. The curve is too inverted. It's just a matter of time.
I also think I put out that post a couple of days ago. I think it's also much more nuanced. This idea of, well, we're going to have persistent inflation because of government spending constantly rising. Look at the debt GDP, the debt clock, right? The USA debt clock. And it's like, I go back to, okay, government spending is only inflationary if it gets sent out to a whole bunch of people to increase the velocity of money, which is largely what happened with COVID. Whereas,
Yes.
if spending keeps on rising, but it's only being funneled to a select number of economic actors, that money gets stuck. So it widens the wealth gap, but that's not necessarily inflationary. So I think there's nuances even in that way of thinking about things.
100%.
Um, what else do you think is being missed in terms of the current narrative around rates, the bond market, duration credit? I suspect it's a lot of, I think, what we've seen this year when it comes to the bond market is very similar to what you see with stocks, which is narratives following price, right? So you've got a popular narrative around duration, and it keeps on selling off. What are some of the things which, if you're going to write the story of next year that nobody's thinking about, would be sort of the next narrative to track?
I mean, look, I think it's going to come down to the access to credit and the ability for deals to get done while
Hello,
we're waiting
220.
for like the Fed's next move. So
Hello,
I,
220
I'm
on
not like
Tesla.
really seeing anything super glaring other than the whole concept of the waiting game, which we've been discussing. There's no like real structural issues as bad as like in 2008 that at least I can scan and look on my radar. So I think it's just really just it's years and years of low rates relative to a fast hiking cycle, relative to that rates still matter. This idea that rates don't matter, I think, was a big narrative this year too. That was why people were gun ho on risk assets, but at the same time they were super bearish duration. So I think that flips, and we go back to more of reality. That the disinflationary forces are still out there. They're just kind of waiting. We had the supply chain disruptions. We had a lot of things that have happened, and of course, you could say like those are going to probably persist, but will they persist at the same magnitude? Probably not. And hopefully we'll get through some of these more darker days, and then we'll look up and realize that the economy hasn't that structurally changed, and we can't afford to live at high rates. So I think it's just getting back into calibration next year will require the Fed to finally relent. So yeah, I'm not seeing anything other than that.
Anything on the commodity side that's interesting? I only mention that because cost push inflation was a narrative all throughout last year, and a lot of that has largely come back in, at least in terms of the industrial metals.
Yeah, well, the one thing that at least kind of I started kind of looking at is just outside of the industrials, but actually even just precious metals and like how gold's been behaving. Like gold is sensing something's up. Um, so I think gold. I think
Say
gold.
that louder, George, because I put
Yeah,
that post out. I said it's more than just an investment; it's a warning.
yeah, that's a great point. Yeah, I mean gold is probably probably a, better at reading the macro conditions now than the long bond has been, which usually in the past duration would win, and it had a much greater discounting factor of like what reality is. I think that the way gold is traded in the last couple of weeks, breaking that downtrend, spiking higher, realizing that at some point we're going to need to go back to the printing press, perhaps. I mean, I think there's some of that is what gold is picking up on. And the printing press meaning just you have to cut rates. I'm not sure the Fed's going to go to QE right away, but I think they're going to try to avoid that for sure. But I think that gold is picking up on, like, this is the only way you can get out of this is you're going to need to add more liquidity to the system. So I think that's what the gold market is probably picking up on. That this is the talk is tough on high rates forever, but at some point they're going to have to cut, and so I think the gold market's picking up on that as well.
Yeah, it's funny to me. It's actually amazing to me that people forget that the government needs negative real rates, right? I mean, which gold is supposed to do well under. So maybe that's sort of the real message. So, which goes back to, yeah, you can have higher rate longer, but if you keep rates higher for longer, but you just get rid of that positive real rate and go back to negative, that's still actually a sizable move for duration treasuries.
Yeah, exactly. So yeah, I think that I mean, on the rest of the commodity complex, like, I'm also impressed that we have obviously these tragic wars going on at the same time, and oil's not catching a bigger bid, right? Like, so like shouldn't that be inflationary? Like, but it's not. So like we're not seeing like and there's just the amount of mileage that Americans are driving, just in general, the usage of energy is declining. I feel like something's up there too. So I think that the energy commodity sector is picking up on that, unless we have a huge escalation in the Middle East, that that globally it's hard to keep oil prices high.
So on a more fun note, so you put that post up. You randomly you were just walking in Japan and randomly met up with Alfonso. You just saw each other. It's like, oh, I know you from X.
Yeah, well, Alfonso has known me for many years and many clients and investors. He was a long-term bond investor for many years, so he's seen me a few times in person, and he's the one that reached out to me, and he looked up and said, "I think I saw you in Japan." I was like, "Are you in Japan?" I was like, "Well," I was like, dude, I work for a Japanese bank. Like, how many how many guys do you think would be like looking like me here? So he was like, so we were just joking around, and he reached out and we caught up, and it was really nice to see him in person. He's a great guy. He's a hard worker and a good macro thinker.
Yeah, I'm a fan of the way he frames things. George, for those who want to track more of your thoughts and work and
what
research,
I was doing was
where
looking
can
at this
you,
50 day.
point them to?
This 50
Yeah,
and
look,
100
if you're
day.
an institutional
This
investor
is a
and you have
support
relationships with
resistance
MUFG,
slash
of course,
support level.
hopefully you should be getting our
I wonder if we're
content.
going
So
to pull
definitely
back
reach
there. We're
out
just going to go.
to my
I'm curious
email.
to see what the markets do.
But
I really am.
just for the broader public consumption, to the extent that I'm able to kind of stay active on Twitter, I do so. We do post our more thoughtful pieces up on X, as well as I will have my own opinions from time to time on X. So always happy to engage if there's anything going on, and happy to connect with you once again, and keep up the good fight. I think you're doing amazing work. So I think you're onto something, Mike, and I think it's it's early days.
Well, yeah, I appreciate it. Listen, I always go back. I'm wrong a lot and I'm right a lot, like everybody, because nobody can predict the future, right? But obviously, I've been very wrong on equities this week, but not wrong on treasuries, right? So, but that's the way the game works, over time. That's sort of the point of this idea of trying to identify conditions. Everybody, please make sure you follow George here on X. I'll have this as an edited podcast in a couple of days. Hopefully, I will see you all tomorrow. Thank you, George. Appreciate it.
Thanks, Mike. Appreciate it.
Cheers, everybody.
See you, man.
On it. Speaking of Live Nation, you own that, also reports today.
Yeah, well, I don't think anybody thinks that the results aren't going to be gangbusters, because they are every quarter. There's just like a switch has been flipped, and people want to be at as many events as they can be at. The issue here is the Department of Justice investigating. They go through this every 3 or 4 years because of the combination between Ticketmaster and the venues. This time looks a little bit more benign. This looks more like they want to talk to the acts and see if there are anti-competitive conversations going on. Like, if you don't play our venue in Detroit, then you can't play our venue in Los Angeles. I don't think that's an existential threat to the company, and that's why I think the stock is higher today on the disclosure of that news. So I'm remaining long. I like the name.
All right, quick break, and then final trades on the other side.
Frank, let me tell you, boy, you're a celebrity out here. You're a big boy. You're a big boy. Frank, let me tell you, boy, you're a celebrity out here. You're a big boy.
Chris here, yes. We normally have like a. It's my fault.
Oh my
shit,
God.
I think we got it.
Excuse me, is this your yacht?
Good.
To opportunity. All roads lead to Apple. In closing bell, we take you right up to that earnings report. Dan Ives, Joe Terranova, Malcolm Etheridge. Plus, where can this market really go? Avery Sheffield, Gabriela Santos will tell us as well. Farmer Jim, give us the first final trade, please.
Boeing took one heck of a step back the last couple of months. It's taking its 2 steps forward now.
Okay. Carrie?
S&P Global, we're finally seeing that the financing cycle is going to start to pick up. Companies need to raise money, and interest rates may be peaking. It's good for them.
Josh Brown.
For better or for worse, for the 900th quarter in a row, I'm going into the earnings long Apple. Wish me luck.
All right. Well,
Good luck.
177. NASDAQ certainly getting a big boost. I'll see you on closing bell. The exchange is now.
Thank you very much, Scott. Welcome to The Exchange, everyone. I'm Kelly Evans, and we have a huge risk-on move today as markets think the Fed might be done hiking rates. Just yesterday, Mark Zandi called the housing market the biggest casualty of higher rates. But our market guest has 2 names in the space he's bullish on if you can stomach some short-term volatility. He's here to make his case. Plus, drug makers can't make those weight loss drugs fast enough. And there's one company our analyst is especially bullish on with a robust pipeline. He's here with the name and how much upside he sees ahead. Plus, is the high-end consumer actually doing just fine? A lot of mixed messages about this segment of the market lately. But there's one luxury travel stock gaining in today's session. The CEO joins us exclusively, fresh off earnings, with the trends that he's seeing. Before all that, though, let's get to today's markets. Dom Chu down at the New York Stock Exchange. Dow's up almost 400, Dom.
So you're in Englewood Cliffs. I'm here at the Stock Exchange. You were in D.C. We're all over the place covering the markets right now. But to your point, Kelly, it's been a predominantly green day today. In fact, we're still holding near the almost up 400 level for the Dow Industrials. Currently up 393 points, north of 1% gains there, 33,668. The S&P 500 back above 4,300 now, 62 points to the upside, 1.5% gain there. And the NASDAQ Composite, 13,237, up 176 points, 1.3% gains there. So generally speaking, a very robust upside day for the markets, indicating at least some of that risk-taking going on in the marketplace right now. One other place we are seeing some of that play out a little bit more, on the safety side, though, interestingly enough, there's also a bid for treasuries to a certain degree. Look at the benchmark 10-year U.S. Treasury note, now below the 4.7 mark. Remember, at this cycle high, we were a hair above 5%, 5.02% at one point, and now we're back down to 4.7% for the 10-year yield. The 2-year note yield ticking just below there. You can see that 5% mark as well, slightly higher in the day, 4.99%. Even the iShares 20-year Treasury bond ETF, ticker TLT, is up 1.33% today. So if you want to look at it in terms of price, that ETF gives you an indication of that upside move, at least in government bonds. And one other place we want to take a look at right now, whether or not it's a risk aversion trade, a safety trade, a non-correlated trade, regardless of what you want to think it is, Bitcoin prices are now up just about 0.1%, but it's up to 34,621. At one point, it was almost 36,000 per Bitcoin. So again, you can kind of see here over the last year, we are hovering right around that kind of cycle high that we're seeing, at least from a shorter to medium term perspective on Bitcoin prices. So Kelly, overall, very rarely do we put Bitcoin, treasuries, and stocks all in the same kind of bucket, but maybe there is a thematic element of the Fed driving a little bit of that risk trade going on right now. I'll send things back over to you.
Indeed, I think so, Dom. Thank you very much. While the bulls are cheering, the Fed's second pause in a row is now actually the time to increase risk. As Bank of America's Michael Hartnett points out, investors would typically want to sell the last hike. Why? Because all signs are pointing to a recession on the way. We saw a bigger than expected jump in weekly jobless claims today, that poor ISM manufacturing report yesterday, and our own Bob Pisani flags that fourth quarter earnings estimates are dropping fast. But that's not discouraging my next guest. He's turning to one of the most rate-sensitive sectors for opportunity. We're talking about housing, and he's got 2 names he likes for the long term. Joining us is Charlie Babrinskoy, Vice Chair and Head of the Investment Group at Ariel Investments. Good to see you again, Charlie.
Hello, Kelly. Good to see you.
I can see you bristling a little at my litany of poor things going on in the economy. How would you read the tea leaves?
Well, I think importantly that there are some sectors that have already started to feel some pain. In general, we've been pretty bullish about the outlook for the economy. The bond market's been telling us we're going to have a recession. We didn't think we were going to have a recession. But one area that has felt a recession is housing. And as a result, there are a lot of stocks in the housing sector that have felt the pain of a 5% 10-year treasury And those housing stocks, housing supply stocks are very cheap in our opinion. This has been a brutal 3 months for value investors like myself, but we do think that we're at the end of the Fed raising process and that we could be having a better environment going forward.
Dwell for a second on what you mean by it's been a brutal period, because it would seem that this has been the tough period for growth investors.
The small cap value index actually underperformed even the S&P, and my prediction had been that higher interest rates would be very hard on growth stocks because those earnings are far off into the future. That turned out to be true, but unfortunately that higher interest rate really took its toll on cyclical stocks. People felt that a 5% 10-year would result in an 8% mortgage rate and that was going to be very tough on housing. And so, again, those value stocks were hit hard.
And let's talk about some of these housing plays like Mohawk and like Generac. These are not home builders per se. And Generac, by the way, what a week all of a sudden that stock's having, although, again, what a tough stretch it's coming off of. Why not the home builders? Those stocks, as we've noted, were much cheaper, 18 months ago than they are now. So dig a little bit into how and where you'd be playing the housing market.
Yeah, mostly it's because the home builders business has actually not been that bad. They have actually held in better because there's so much demand for new housing. What's come way down is repair and remodel. And obviously there was a fair amount of spending in that space in COVID when everybody had to stay home. They decided to improve their library, maybe build a deck, maybe build a pool. That has come down. And again, the prospect of an 8% mortgage rate has meant that people weren't going to borrow to upgrade their own home. We think going forward that there's still a lot of pent-up demand for housing, and when people can't buy that new house, they will repair their own so that they can stay in their current mortgage. But right now, the market is predicting very tough times for housing in the next quarter, and the stocks were hit very hard.
So you're in this for the long run?
Yeah, and we're in this because we are in an unnormally high mortgage rate. So we've got right now real rates that are way over historical averages. The real rate of interest after inflation has averaged about 1% over the last 100 years, and it got to over 2.5%, particularly in the 10-year. And so we think that's going to come down as the Fed has been selling bonds, has been allowing bonds to mature. There's a lot of focus on them taking up short-term rates, but what's just as important is they've been selling bonds, about $1 trillion worth of bonds, and that's put huge pressure on long-term interest rates. We think those are going to come down over the next year.
You think the long-term interest rates are going to come down over the next year?
As the Fed stops tightening. Again, they sold $1 trillion worth of bonds. They aren't going to do that going forward. When it was the Fed buying bonds that sent interest rates down to those unsustainably low levels back in 2020 and 2021. Over the last year, this hasn't gotten the publicity it deserves. They've sold $1 trillion worth of bonds, and that is a big reason why rates went up to 5% in the 10-year. We think that is going to stop, and when they stop selling bonds, we'll get a normal 10-year, which I'll call 4%, which would help a lot.
That's really interesting, though, because what you're saying is actually a huge point of debate. There's some people who think that QT is going to go on for literally years to come still, and others who think they're going to be forced to stop it as soon as, it's kind of wonky, but as soon as reverse repos are drained or things like that. So I'm surprised to hear you say you think they'll be forced to stop it as someone who's been a little bit more upbeat about the economy.
Yeah, I mean, I think that they're going to see what they know is that higher interest rates have a big impact on one industry in particular, and that is housing. And they are going to start to see what we're seeing, which is real softness in that area. That can result in increases in unemployment. The housing market is very important to the overall health of the economy, and they're going to start to see the impact of an 8% mortgage rate. And so I do believe we're going to have an end to Fed tightening with short-term rates, and we're going to have at least a slowdown in the Fed selling bonds. And when that happens, we get down to a more normal 10-year rate, which I think is 4%. Again, a real rate of about 1%.
Very, very interesting. Well, now that I can't talk to you about the Sphere anymore, which viewers on this show, they knew it was coming. They had that rally. But what about Paramount? I got to end on something a little different here. Are you still in Paramount? That stock's having a nice day. I mean, what else? Just give me something fun from the portfolio.
Well, I think you need to. The Sphere's going so well that you need to look at other avenues to play a similar experience, and that is Madison Square Garden Entertainment, which owns Madison Square Garden, and they're going to have a wonderful venue business. The Madison Square Garden Sports owns the Knicks and the Rangers. People are going to watch sporting events, and so Madison Square Garden Entertainment, which does have the Dolan discount.
I was going to say, are you friendly with Dolan?
We think that the stocks are cheap because other people really don't like him. And so we think he's done some things that have worked out. The Sphere was his brainchild.
Indeed.
And the Sphere is going to end up being very good. But there's no question the stocks trade cheap because of his involvement.
All right, Charlie, always a pleasure. Thanks for your time today. It's good to see you again.
Thanks, Kelly.
Charlie Babrinskoy with Ariel. Let's move on now to the labor market, which has been the pillar of strength in this economy. But Double Line's Jeffrey Gunlock doesn't think that will persist.
I really believe that layoffs are coming. I think we've seen hours come down, we've seen hiring freezes, and now we're starting to see layoff announcements, not en masse, and not on but they're out there in financial firms and technology firms, and I believe that's going to spread.
Although my next guest says his data kind of shows the opposite. His firm, Recruiter.com, saw a jump in open positions for job recruiters last month, typically an early indication for a pickup in hiring. For more, let's bring in Evan Sohn. He's the chairman of Recruiter.com. Evan, it's good to see you. And is this a new development?
Good to see you as well. Look, I think Jeffrey's right. There are layoffs coming. We're seeing them in the hundreds. In different sectors. I think when you talked about recruiters, and finally now we're seeing recruiter open roles for recruiters jumped 8% month over month from our partners over at Aura and the Aura report. That's a leading indicator. So I think the tech companies that laid people off earlier in the year, that was successful. They reset their overall companies themselves, and now they're looking to hire again. Salesforce.com, notably, they made major layoffs earlier in the year. And then they recently announced they're going to be hiring lots of people, and they're gearing up for that by hiring recruiters. Recruiters are a leading indicator of both job openings and then recruiters as well.
Real quickly, what is Aura, the Aura jobs report?
Oh, sorry. It's a partnership that we have with Aura. Aura is a company built by Bain & Company, really looking at workforce intelligence and workforce insights.
And so it's interesting that they say that tech, one of the first areas to shed workers, is maybe going to be back in hiring mode. But you did warn about some layoffs. Is it elsewhere in the economy?
Yeah, so like LinkedIn just announced some layoffs. Schwab announced layoffs. So we are seeing layoffs. But I think we've all sort of noticed that this was a rolling recession when it came to the overall job market themselves. So each industry has sort of had their moment in time where they've announced layoffs. We're seeing some companies that sort of held off announcing layoffs. Maybe Schwab, for instance, with their merger with TD, really held those off. But if you look at the overall jobs numbers, the open jobs, the month-over-month open jobs were up by 1.6%. So here we are coming into November, the end of the year, and jobs were up. Actually, in the Magnificent Seven, they were up by 17%. So Apple, for instance, was up by 15% month over month in terms of open jobs. So you're seeing now healthcare. Healthcare still is number one, though healthcare did tick down both in the Recruiter Index as well as in the Aura jobs report, ticked down just slightly, but it still is the number one slot there in terms of overall industry segment.
And I see here that a lot of these jobs are in a salary range of 100 to 150K, kind of that mid-management level. What does that tell you?
It tells us that there is still this, first of all, there is a higher candidate sentiment. So candidates still feel okay putting their name out there to leave. We saw the quit rates in the JOLT report be consistent for the last 3 months. And so maybe managers are now looking and they're open to jobs. Either they're paying more money, they're giving a better work-life balance, more compensation, et cetera. But really interesting to see that so many of the open jobs are really in that $100,000 plus range.
So, do you think tomorrow's report to make you force you to a prediction?
We were all wrong last month, right? We were all wrong last month. So really, everybody was wrong last month. So the one light I would say is hospitality roles were up 5% in terms of open jobs month over month. And we're now coming into that season where those hospitality roles, the seasonality roles, are really up. We saw that, I think, even 2 years ago when things were more difficult. We saw a really big boom in terms of hiring in November of those jobs. So maybe that could actually balance out some of the more flat hiring that we've seen overall in the overall economy. Certainly, these last few months has been incredibly balanced.
All right, the return of the job hopper economy. We'll see how much longer that's around. Evan, thanks as always for your preview today. We appreciate it.
Thanks so much, Kelly.
Evan Sohn from Recruiter.com. Still to come, a mixed bag for healthcare stocks as the battle between weight loss drug makers ramps up. Up next, we'll hear what one CEO is saying about the competition and get the street's take on who's best positioned into year end. Later, we'll check in with the CEO of Host Hotels and Resorts, fresh off of earnings with the stock on pace for its best week since May. It's up 4.5% today. Can it be resilient if we do see a slowdown? And I want to draw your attention to Constellation Brands, whose shares are halted ahead of the company's growth presentation at its Investor Day. That kicks off at 2 p.m. Eastern, and we will definitely keep an eye on it. Up 0.5% before the halt for STZ. We're back after this.
This is The Exchange on CNBC. $85.55.
Welcome back to The Exchange. Shares of the obesity drug makers are mixed today after reporting earnings. McKesson lower 2% despite stronger than expected earnings and revenue, while Lilly and Novo are higher, about 4%. All three shared a positive outlook on GLP-1, aka weight loss drug growth. Here's what the Eli Lilly CEO said on CNBC earlier today.
I think a lot of the news is about the incretins, Mounjaro, and by the way, Joe, we have half a dozen other weight loss medicines in the pipeline with different profiles, including one in phase 3 that could have as much as 30% weight loss in obese individuals. So, you know, we're a serial innovator in obesity.
Well, my next guest is also bullish on Lilly. He upped his price objective on the stock last month by $100. That was 20% upside. Joining me is Jeff Meacham, senior analyst in the biotech and pharma space at BofA Securities. Jeff, it's good to see you again. Welcome.
You too, Kelly. Yeah, thanks for having me.
Where are we in the hype cycle at this point? Because, you know, basically every possible headline, both regarding the companies themselves and the rest of the stock market, has been floated out there. But what are the fundamentals telling you about whether their price increases and their prospects are justified?
Yeah, it's a great question. Definitely, this quarter I think was pretty good for Lilly. It wasn't dramatically better than expectations. They did beat the Manjaro number, which is, I think, one of the main metrics. But I think what you saw today was validation of Lilly's growth profile, really over and above the rest of large cap biotech and pharma. I mean, we're talking 20% top line growth the next couple of years, mid 30s earnings growth, and that could be up to 10 times better than a lot of larger cap peers. And so that's, I think, where we are in this cycle. I mean, I still think we're, very, very early innings. I mean, Manjaro, I don't know what the brand name is going to be, but tirzepatide, the name of the drug, the GLP-1 from Lilly, isn't even formally approved yet in obesity, and yet we're seeing the growth, as it is now.
Well, and we have a colleague of mine around here is always so frustrated because right now he had been on one of the weight loss medications, maybe it was Ozempic, literally a shortage of it, and other issues are forcing him off of it. So what do you say in terms of when these are going to be more widely available, even to just the patients who would like to have access to them now?
Yeah, for the most part, I mean, obviously you have to get formal approval, and that should happen for Lilly by the end of the year, and then you'll have Novo and Lilly. For the most part, I think working on reimbursement and access in 24 and 25. It's still not formally approved or not formally reimbursed by Medicare and Medicaid, but commercial insurance it is. But that is, I think, one of the biggest questions for GLP-1s is, how long are people going to be on the drugs? Once someone loses 15 or 20% or more, a lot of times they'll go off or a payer will force them to go off. But I think to get all the benefits of these drugs beyond just weight loss, you need to stay on a little bit longer.
I'm looking at sort of coming off of the COVID cycle and the damage that's doing to the main drug makers there, and thinking about, if Lilly and Novo and these names all really need to ramp up their supplies to get more supply into the market, are we going to look back in 2 or 3 years' time as they're kind of also coming off maybe the peak and saying, now they're oversupplied and the stocks are down? I mean, how can they be confident that if they scramble to increase supplies, they won't be punished for that?
Yeah, I would say for the most part, the demand is there, no doubt about it. In just the U.S., I mean, conservatively, the population could be something in the 100 million, patient population, and it could be as high as 150 or maybe more. But Lilly and Novo are investing pretty aggressively in supply, an expectation of that higher demand. But just to frame it, Kelly, I mean, I would say, here we are 4 quarters, a little bit more than 4 quarters into the Manjaro launch for Lilly, and we're already on a $6 billion run rate. So it's early, right? And I think these are going to be really big drugs over time.
That's NVIDIA-esque, in fact. And I see that it's helped McKesson as well, obviously doing tons of shipments of these medications. So looking across your coverage space then, do you stick with the manufacturers? Are there secondary players that might benefit or be hurt as a result?
There's definitely other players in the GLP-1 space. Pfizer and Amgen are pretty early in the development there. They have phase 1 and phase 2 assets. It's not going to be a zero-sum game. It's probably going to be Novo and Lilly for the next, call it 5 years or so. But I think there's a lot of other manufacturers, mostly, big cap, biotech and pharma that could participate. And those are the two that people mention is Pfizer and Amgen. But, why shouldn't, other bigger cap, companies be in there, right? So a Bristol or a Merck, for example, or an AbbVie. The suppliers that definitely will benefit from the much higher demand. But the big question is, how fast can they get to critical mass on supply?
All right, Jeff, we'll leave it there. Thanks for your time. We appreciate it today.
Thank you.
Jeff Meacham. Still more upside to come for some of these big guys. Coming up, check out shares of SolarEdge, down as much as 19% after hours after disappointing results and guidance, but it's come quite a lot back. It's down 6% right now. We'll take a look at what is continuing to batter the solar stocks. And as we head to break, here's a look at the sector heat map with all 11 groups in the green today, led by those rate-sensitive plays, real estate, utilities, energy as well. Real estate is up 6% just since Monday as rates drop. We're back in a moment.
with ice.
Welcome back to the Exchange. Here's a glance at markets with the Dow up 442 points to just about session highs. The rally's been building all day. The S&P is up 1.6% to above 4,300, I believe above the 200-day, and that's setting off some happy alarm bells for a lot of bulls into year-end. And the Nasdaq up 1.5%. Starbucks is having its best day since the start of the pandemic. After it just beat on the top and bottom line for earnings, it's up almost 11% now. Same-store sales were up 8%. Higher average checks playing a role in that. They also had a 3% jump in customer traffic. And take a look at some of the media stocks, with Roku up 30% on a big revenue beat, up 20% from a year ago, thanks in part to a rebound in video advertising. Paramount reports after the bell. That stock's up nearly 9%. Warner Brothers is next week. They're sharply higher after Roku's results, though. Even Disney up almost 2.5%. Also, Constellation shares reopened a few moments ago. They were up 0.5% before that investor presentation. Now they're up about 0.75%, and there's more to come at 2 p.m. Eastern. And finally, SolarEdge plunging on disappointing results and guidance, but looking much better today than last night. Down 7%. Last night it was down almost 20%, and it dropped 27% 2 weeks ago on preliminary results. So to cap this all off, we've brought in Pippa Stevens following the story for us. Really a tough stretch for them, and they're not the only ones in that sector.
Yeah, really tough indeed. And remember, they did announce 2 weeks ago that things were not going to look great. And even so, they still disappointed. So Q3 was lower than expected, but it really is the Q4 guidance. They see revenue between 300 and 350 million. Wall Street was looking for 700 million. Yikes. And in Q2, their revenue was almost $1 billion. So this has deteriorated very, very quickly. They see margins in Q4 between 5% and 8%. 2 quarters ago, they were over 30%. Slowdown in Europe has really taken Wall Street and also company executives by surprise.
So there's a lot of different solar business models. For instance, you have ones that are more like yield cos. You'd understand if those are underperforming with rates. But what does SolarEdge do? And it's interesting that their revenue number has fallen in half in the last couple of quarters. That's pretty stunning.
Yeah, so their main business is the inverter business. And so that is the brains of a solar system that converts the solar power to power that can go back to the grid, be used in your house. And the reason why they're seeing such a dramatic drop-off is because in Europe, where 80% of their revenue is based, their power prices have come down so much. It was only last year that we were talking about Europe was going to have this energy crisis. Right. That did not materialize, and so people are less willing to go solar. And with rising rates, it makes the payback period, or the period during which the system pays for itself in terms of lower utility bills, longer. So there's not as much of an incentive. But what was really interesting was Ronan Fire, the CFO. I spoke to him last night, and he said that through August, things were looking pretty normal. And then all of a sudden, September fell off a cliff. And so in every other year, July and August are down in Europe because everyone's on vacation. It has always bounced back in September, every single year. That did not happen this year. And so even when they warned 2 weeks ago that things were not looking great, they didn't at that point know about the magnitude, which is that just buyers in Europe have not shown up. Now, he did say it's country specific to a certain extent. In the Netherlands, they're looking at their net metering policy. In Austria, they're going to suspend taxes starting in January. And so why would you buy a system now if it's going to be cheaper in the new year? So there are a lot of country specific issues, but then that's all within the backdrop of rising rates, which are just hammering consumers and making it nobody want to go solar.
It really is a perfect storm, a perfect solar storm.
Pretty boring
as
day.
you said earlier,
nonetheless.
Coming against the industry, and that's just a shocking
traded the
outcome.
wrong names.
Pippa, thank you very much.
Like
we appreciate
me.
Pippa Stevens. Let's
But
get to
we
Julia
still
Boorstin
made
now for
some
the
money
CNBC
today.
News
Look
Update.
at
Julia.
Roku, dog. Look
Kelly,
at
White
this
House
fucking
officials say
thing.
on his trip to the Middle East, Secretary Blinken will urge
Motherfucking
Israel to briefly
$80,
pause
bro.
military operations to allow
crazy.
hostages to be released and aid
It's
to be
actually
delivered.
not crazy.
Officials clarified that the
Because we said
humanitarian
this Monday.
pauses would be different than a ceasefire.
This is why I'm trying to tell
A
y'all.
former Memphis police officer changed his
half
plea
these
to guilty in the
motherfuckers out
fatal
there don't
beating
know
of
what the
Tyree Nichols.
they're talking
the
about.
officer pleaded guilty to federal charges
Trying
of
to
excessive
tell other
force and
people what to
obstruction
do. We
of
don't tell
justice.
people what to do
And he
here.
will
We
also
just give
plead
our
guilty
thoughts.
to
And our
state
thoughts
charges.
were this
Prosecutors
thing
are
could
recommending
get
a
itself back up
15-year
to
sentence.
that previous
It is
high.
unclear whether the other 4
Could have a
officers in
decent
the
earnings.
case will follow
They
suit.
told you last earnings.
The suspect in rapper Tupac Shakur's murder case pleaded not
down
guilty
on its lows,
today.
and you
Police
see
said
what
Dwayne
happened.
Davis had been a longtime suspect after he made a series of public statements implicating himself in the murder. Davis was charged with 1 count of murder for allegedly leading a group in the drive-by shooting that killed Shakur. Back over to you.
Shakur.
Julia, thank you very much. Julia Borston. Coming up, how is the high-end hotel industry holding up in this macro environment? We'll ask the CEO of Host Hotels, fresh off results with the stock having its best week since May. Marriott Marquis owners. We're back in a moment.
So you're still in this range. I mean, the resistance level, you have this little range here, but your next resistance level isn't really up until 86, 85 area. You know, SoFi was starting to pull itself back, right? Might be a trade to take until tomorrow or next week. Don't know how liquid it is or how liquid it's going to be. Looks like it's starting to already try to go back to trading in barcodes. I don't know why this name doesn't trade more. I guess some people don't really know how well it does trade when it trades, but SoFi can give you some nice setups. Look at this clear resistance level. All right, clear resistance level. Tried to crack above the 50-day, couldn't do it. Just hanging out. Probably a pullback to fill the gap. That would be my thought. Right? See if you can't pull back and fill this gap. Get back down to yesterday's high to find support. Regionals are killing it today. If you didn't know, they're going to be up for murder charges, just like the Tupac guy. Fuck, they're killing it right now. So, if you ain't know, something BDO. I don't know. I'm just talking on my ass there. It's a commercial. You guys know what I'm talking about. Yeah, Ian, PH, little volatility, like always. It's just a boring damn day waiting for Apple and waiting for tomorrow's non-farm payroll. So, I don't know how much, I'm actually kind of curious even if the non-farm payroll comes in hot, if the markets don't care because the Fed's done raising rates. That's all they care about. That's also the other side of the story.
Welcome back to the exchange. Shares of Host Hotels and Resorts
this
up nearly 5% on a bottom line beat and
do we just go long, guys?
The world's biggest lodging rates saw nearly 8% growth in its funds from operations from the previous year.
We're there.
They're also the largest third-party owner of Marriott
we're back
and Hyatt
at the
hotels,
prior Fed day.
72
Do we? Should we just worry about gap fill? Are we going to 440?
Exclusive interview with Jim Rizzolio. He is the CEO.
This is
Jim,
insane.
It's good to have you here. Welcome.
Kelly,
that's it. I'm buying calls right now.
This flies in the face a little bit of what we've
buying
heard.
calls
We've had
right now.
companies lowering guidance. We sometimes hear the high-end consumer is hard hit, or even the Target CEO today said people are even pulling back on groceries. Maybe that's not your core customer, but what are you seeing?
Well, we're very optimistic about
there's
the
another
state of
pop.
travel. We
Pop,
had
lock, and
a
drop.
terrific quarter, as you just pointed out, we're able to hold our guidance for the full year. We're optimistic on a lot of different fronts because we continue to see strength and improvement in our group business. It's very strong. We're seeing the gradual evolution of the return of the business traveler over on a month-by-month basis. Our leisure rates, our leisure customer, we have 16 resorts. Leisure rates are still up 56% compared to 2019 in the third quarter.
It's so weird. It doesn't look the same. The daily chart doesn't look the same as it. Oh, this is ES. That's why.
International inbound's another tailwind for us as we start to see the international business recover. That's going
because this level here is what I'm looking at as support.
Consumers are they're just still prioritizing experiences over goods. We see it in our out-of-room spend in our hotels, both in the resorts.
I don't know if I should shoot for the IWM,
properties
even
as
though
well
the
as our
IWM
urban properties.
sucks.
Our food and beverage numbers
is a good
are
trading
above
vehicle,
where they
but the
were in
companies suck.
2022 and 2019.
Sorry to
So
be so
we're
blunt.
optimistic on a lot of fronts.
That's interesting, and it jibes a little bit with what we heard from Charlie Babrinskoy earlier on, who said, you know,
Right
the fact
there.
that the Sphere in Las Vegas has done so well is making him bullish
435.
on a lot of other parts of this space.
Right.
So you mentioned group, and I don't know if the Marriott Marquis, just one well-known example around here,
So
if
we
that's a
rally.
big part of
We
revenue or
bounce.
EBITDA or anything
We
like that. But
bounce. Or we
when you
rally,
see
we
that
pull
group
back,
is
we
kind of
bounce.
coming back and driving some of these results, just talk in some detail about what you're seeing there.
Sure. In the third quarter, we booked 245,000 group room nights.
There's just
in the
no
quarter,
stopping it.
for
Look
the
how
quarter.
green the
And
look, this is insane.
that revenue pace for 2023 is
yeah,
almost
I'm gonna.
7%
What's up, Bingo?
greater
How you
than,
doing, buddy?
where it was
It's
at
good
this
to
point
see
in
ya.
time in 2019. A differentiator for us, in many ways,
It
is
is.
the quality of our assets.
Yeah.
And we
I
have
mean,
invested meaningfully
the Fed's done
in our
cutting rates.
properties
I
over
mean,
the course of the
they're
pandemic. We've
they're
invested
just
$1.5
everybody,
billion
you know,
in
because
our
you got to
hotels,
remember.
in addition to acquiring
Think
80
about everyone
properties, at a cost of $1.8 billion.
that got
So,
short here.
Marriott Marquis is a good
And you're
example.
talking
We
1,
did
2,
a complete
3,
transformational
4,
renovation
5,
of that
6,
asset,
7 days, pretty much.
over the course of the pandemic.
7 trading
And we
days.
have
That's a
seen
freaking
meaningful
week.
pickup in group
And you went
business and
from
transient business at that
430,
property.
440 practically
In
to
fact,
410. That's
I
$30
talked about
almost
this on the
5.
call today.
1,000 shares on that, 30
that are
bucks
very
is 30
important to us from a
grand.
business transient
And that's,
perspective. New York,
you know,
San
and that
Francisco, and Denver.
that's small retail.
are only down 10%
You know?
in business transient room nights
So,
relative to
and then
where
you get
we
some
were in
buyers
2019.
to throw
So,
on, man. This thing can just get
you know,
going.
we have a
We got to
fortress
start
balance
thinking
sheet,
about
Kelly,
37,
that allows us
437.50.
to pull levers on all fronts.
That's
We're
that
the only
gap
investment
fill
grade lodging REIT.
resistance. Let's see, because
And,
this is
in
the
addition
area
to,
I'm looking at. I just
you know,
feel like
continuing to invest in our assets.
we got to see. I don't know. I
acquiring
can't call it.
hotels.
I just think
In the quarter,
Apple's going to be bad, but is it going to bring down the markets?
Yeah.
Let's go see what it did last time. How about that? Let's see what it did last time. Let's go to Apple.
I got to get back to the Marquee. I think it's been a few. You know, when
Let's
I was
go
young, my
to
uncle
an
would take
hourly
me in the
chart,
elevator, and it would
or-
shoot
Yeah.
up to the top just for the
You
experience.
should go check it out. I don't think you'll recognize
hourly
it. It
chart.
is a
Wow, really?
really,
And what day
truly
was this?
reimagined hotel. Yeah.
Okay, so final question on a much
What day
you know,
was
wonkier note. You did
Apple's
mention the balance
earnings?
sheet, and tell
See,
us
it had
what
already
effect
sold off a
rates
bit.
are having. You know, we've seen this historic rate shock. Now we're coming off that a little bit,
October- is
and
this
not just
October?
your stock. A lot of the REITs are doing quite nicely today. What's this going
I
to
have
mean?
an
This
hourly
level
chart, so
currently of
why
interest
is it
rates for
like
your business the next
9,
couple of
11?
years?
Oh, that's the time.
Well, for our business, higher interest rates are actually good. You know, as we sit here today, we have $2.6
Here, I'll
billion
just use the
of
daily
liquidity.
chart.
That includes
Let's see
a
what the
fully
market did
available
with
$1.5
Apple's
billion credit line,
earnings
and the
from last
balance
time.
is in cash.
This was
so from an
8-3.
acquisition perspective, acquisition financing is
October
tough. It's
3rd.
expensive.
No, not October 3rd. August
and it's
3rd.
kept a lot of people on the sidelines. We have the ability,
No,
and the
July?
only ability in the
August.
lodging
Yeah,
space,
August 3rd,
and
right?
frankly, it's probably
9 would be
one of the
September,
only
10 would
buyers
be
that
October.
can go in and do deals on an all-cash
So-
basis. So we have very
August 3rd.
minimal maturities.
August
We
3rd.
have
Let's
one
go to the
$100
SPY.
million bond deal
And let's go to the
due
Qs
next
and go to
year,
August 3rd.
And it's very manageable.
Because I'm
So
telling you, I
we're-
think
we're
Apple
excited
has the
with our
same
position.
thing. I think they
Nice
have a bit
place to
some
be
issues.
in this kind of environment.
do.
Jim, thanks so much for
I
joining
think
us
they
to
do.
talk about the portfolio
Just
and the
like
properties.
Roku
We
and stuff
appreciate
like
it.
that, we
Thank you.
said
Have a
that
good day.
Jim
we
Rizzolio
thought these,
of Host
you know,
Hotel.
these
Still
these
ahead,
mid-cap,
Yum Brands,
large-cap
Canada Goose,
tech
and
stocks
Estee Lauder all
could go
reporting a
higher.
slowdown
A lot
in
of them
China
were on their
last quarter.
lows.
Yum
Like
managing
Roku,
to weather concerns,
Shopify,
though shares
right?
higher for the
Roblox,
week.
stuff like
Goose
that.
and Lauder both down more than 9%.
All right, where are we at
What will be
here?
the story for Apple after the
And
bell
it's good to
today?
see you, Bingo.
We'll
I
discuss
hope
that
all
one
is
next
well,
with the Dow up
my
almost
guy.
500 points now.
I hope all is well. No. All right, whatever. Sorry, I was trying to get this thing on my screen. So, August 3rd, right? August 3rd? Right there. That was the day after the Fed day, though. Okay. Wow. All right. So, it didn't really do much to... it did kind of send the... I think there was a lot that ensued here. No, this was the Fed day. Right? This was the Fed day. Right there. That was Fed day. That's why I put these blue boxes there. So we know, like, look, like this blue box here. Now we know we are trading back at the last time we had Powell. which was last week. It wasn't like a Fed day. I think it was just Powell talking. So that's the Powell box. All right. There we go. Thanks, man. Yeah, it has. It's been okay. I kind of just been, you know, I don't know. I can see myself. I see myself going back to the way I was trading and stuff. But then it's like I always just. It's like I don't know, man. I don't know. It's not that I'm like red or doing things wrong and like I'm on the wrong side of this trade. It's like it's either I'm in the wrong name or like I'm not catching the follow through names, or like Roku today. I should have just taken that trade. But I was too busy watching Tesla. Like, I don't know about my brain. I really don't sometimes. I don't know if it's because I'm doing a stream and like I'm you know, doing like so many other things. And it, you know, I can't, I don't know. I'm not sure what it is, but I'm just going to keep on keeping on. So there's a pullback. Shopify. But yeah, the SPY looked like it pulled back a little bit with the markets when Apple reported. We have non-farm payrolls the next day. So I'm just curious if like the market has its mind set on a Christmas rally and it's starting it now. Right? I think everybody's just trying to get long and get ready for that Christmas. Because look, here's what I said. I told you guys last Thursday, which is this red bar, not this one. 13. I said the market, I felt, wanted to go up. But the news with JP Morgan selling and Exxon and Chevron's earnings, that was big Dow names, had the Dow sinking pretty hard. And I felt like we were going to have an up day this day, but you had news that you know, sent us lower. Because you could see we traded flat Thursday, which we're like, all right, we're starting to flatten it out, right? It tried to hold it. It tried to bounce back up, but there was too much pressure in JP Morgan, Exxon, Chevron, and a lot of those names that, you know, once the Dow's going down, that's Apple, that's Microsoft, that's, you know, and then throw energy in on it, you know, so I should have went long here that day. I wasn't sure how we were going to recover. Like I didn't know if JP Morgan was going to be like Tesla when Elon started to sell. He's doing some research. I didn't know they had a chief belonging officer. That's hilarious. That's so funny. That's so funny. That is hilarious. I'm gonna have to look that up. That's so funny. That's too funny. I was looking at Walmart today. It's funny you say that. It made a new 52-week high. Or not a 52-week high, but a year-to-date high. It might be 52 weeks. I don't know. But it made a new yearly high at least. So, yeah, it's a new 52-week high. I mean, a high is a high, right? So yeah, it made new highs today. That's right, didn't Target report? Hold on. I thought Target, why was Target on CNBC this morning? That's so weird. I was like, yeah, I didn't think they had earnings. I didn't think Walmart and names like that had earnings just yet. Oh shoot! So we have Net, Fortinet, So Starbucks already released earnings, and it was supposed to be tonight. Because Starbucks is going crazy. I guess they released them early. That's Bucks. Yeah, they must have released them early. Yeah, they did. Or something's going on here. They got this wrong. Because this says after close. Coinbase this afternoon. So, there's still an opportunity for me to turn my week around. I hope you guys are able to have had a great week. If you had a good week, don't ruin it. But I still feel like there should be more opportunity than there was. PLTR. Look, Palantir trying to make another high. Wow. So tell me more about your CFA challenge, Bingo. Is that what you're is that what you're are you taking your Series 57, 56 exam, or you already have taken it? I think it's 56, I think it is, or something. Cuz I was I thought about taking mine too. I thought about studying for it and taking it. And I didn't know if you have taken it already, if you knew anything like if it's pretty difficult or what. I'm sure if you know your stuff and study for it, it's I don't know if it's timed either. I'm sure there is a timing section. I don't know. But that's cool. That's awesome, man. Oh, lordy. All right, let's see here. Let's do it. Let's try to bring a little winner home. I'm gonna look at Palantir, and I want to see what happens here. Haven't taken any phonics yet, but my studying for this, i.e., the CFA is to challenge this where groups of students around the world equity evaluation company. That's awesome, bro. That's cool. That's awesome. That's really cool. Let me see here. Okay, here's the second one. So basically, complete an equity evaluation. Completion starts with the written report. Approved. We go to the presentation portion where we present financial analysis proceed. Where it goes regional. That's awesome. That's awesome, man. I wish you guys the best of luck on that. That's really cool. That's really cool. Did they give you guys any type of like I mean, you've heard of Morningstar and stuff like that. We have to make any recommendation report with Walmart. You have to make it by recommendation for report for Walmart. Here's a buy recommendation because buy recommendation. Why? Let's see if I can help you come up with a buy recommendation. Just so, like, not doing any type of research. Just other than look at. You know what you could look at? Look at the past 2 to 3 years, if you'd like, or even just do like the past 3 years or a year. This is cool. I like this. See if you can see if loss prevention. See if like theft, if they've been able to do things with theft to bring down theft quarter over quarter, and see what rate of change that is, which could be added to the balance sheet. They serve. Let's see if you could do like what. See, Walmart doesn't really. Maybe they do that. What I was thinking is like, um, gift cards. I don't know if Walmart alone has gift cards. It's like Walmart sells the gift cards to other places. That's the thing. Because that would be because whatever gets unused just sits on their balance sheet until it's used up. That's cool, man. That's really cool. I would see growth year over year. A recession. Um, where else are you gonna go to get like cheap food, canned food? Where are people gonna go to? Yeah, it's as easy as that, right? If you're coming into, let's see, they're doing more online sales and pickups and what are I don't know. That's a really cool thought. Like why like trying to buy like uh to to write a buy recommendation and coming up with the reason stuff. That's really cool. Like there's like a lot of different angles I feel like I could go at. You know, just looking at like loss prevention, and theft, and seeing if it's up or if it's down, and if it's down, and if it's you're seeing that it's down quarter over quarter, see, what that would mean for like a year, 2 year, 4 year, 5 year, um, percentage or whatever. Yeah, yeah, they do. There is actually. That's what I mean. It's like there's so many different angles and different things that you could do to talk about. That's really cool. I kind of just was just talking about it because it's like you brought it up, so I'm like kind of just thought about it for myself. Yeah, that's really cool though. Like you said, there's a ton to talk about. Obviously, there's so many angles you could go through and stuff like that. So many different angles you could go about. But what's next? What's on the curve for Walmart? Is this like what's the next thing? Like obviously their main focus is in retail. They've gotten into groceries and this and that. Are they and like you say, they offer a lot of cool stuff because they can have dental offices, McDonald's, right? Are they going to start acting like Target and go into like having like Sephora or like different like makeup brands and like different things for and you know what is another thing outside of that is like what they do that Target doesn't do is like they have everything from like sports, fitness, outdoors, from like hunting to fishing, and then to painting, to like home decor. They have like literally every single inventory and like sections of things that you can cover and collect a margin on that Target doesn't. That's the thing with Target that I don't like is like there are some parts that are left out. I like Target. I like Target personally, but I can't go to Target like if I want to go. It's like sometimes like Target just won't have some things that Walmart will have. Like Target won't have like outdoor stuff. Like if you want to go fishing, chances are you're not going to find fishing poles or knives or things that you need to go fishing. For instance, at least at Target where I'm at. So that's really cool. That's awesome. That's awesome. I would just say Walmart just hit an all time high. Mic drop. That's all you gotta say. There's your buy rating. It just hit an all time high while everything else is still like below. Below their all time high, right? Like, that was a joke, obviously, but I'm going to look around for a minute, guys. It was good to talk to you, Bingo. It's good to see you. I haven't talked to you in a while. Look, Shopify getting ready to go higher as well.
At 5, you said
I like this guy.
what's next, and we're at like 465 today.
I did, Kelly, but let's take that victory lap together. How about the whole crew on the exchange takes a victory lap? We've had a ton of bond experts being rolled out on CNBC, but I'm going to go back to two things. One, I've traded the 10-year note for a long time. But secondly, when you look and feel the way it was just a trade that was overextended. Bill Ackman talked about covering his trade when the 10-year went above 5%. So whenever you see the pendulum swing so hard in the futures market like that, it's expectation. And then you have the Fed 1-2 punch talking about the pause. We called on your show with you the pause that was happening, and it kind of got verified yesterday. So that's where you're seeing the 10-year down at 4.62%. That was the low yield today. And yes, I do see it tucking under 4.5%, which should continue. Heard it here first, to light up that Santa Claus rally.
All right. Thank you, Santa. We appreciate your time today.
It is going to be hard for me to believe that that 10-year yield is going to be under 2%. I cannot see that happening. Do you guys see that? Do you think the 10-year will be trading below 2%? Not below, but even at 2%. There's no way. I don't see it getting below this area for quite some time. I think this is your next range. 3.4 to 4%. Right? That seems like a fitting area for it. I think that that's crazy to think that it's going to be below 2%. Yeah, man, definitely, bro. Yeah, definitely do that. Yeah, that would be awesome, bro. I appreciate that. That's sweet. And I hope you guys take it all the way, man. Hope you guys kill it, crush it, you know. That's awesome.
Welcome to Power Lunch alongside Kelly Evans. I'm John Fort, and stocks are jumping today as markets continue to react to the Fed decision and the chairman's press conference. Yields tumbling as markets seem to think the Fed is done hiking. We'll break down what that means for stocks and look ahead to the next big event, Apple earnings. Plus, rising rates have made buying a house a lot more expensive very quickly. We're going to look at what that's done to the real estate market and discuss the current battle over brokers' fees. Kelly.
And that's a juicy one. Let's first get a check on the markets, though. Speaking of juicy, the Dow's up 503 points right now. Apple reports after the bell. It's up 1.5%, while the S&P is up 1 3/4 to 4312 now, and the Nasdaq up 1.6%. All of this on the back of lower bond yields. One of the many big earnings movers today. Look at shares of Starbucks after sales and profit beat estimates. It's up almost 11% now. It's guidance above the current estimate. That's been a rare thing lately. The CEO saying demand remains strong and the pumpkin spice latte is helping boost sales. Yields I mentioned, let's get a quick check on the 10-year where we see that yield dropping all the way down to about 4.65% today from a recent high above 5%. And investors are betting the Federal Reserve could be done raising rates this year. What's driving the action today? Well, it's that. The Dow and the S&P both pacing for a fourth straight day higher. The Nasdaq on pace for its fifth day higher. All while we see not just the 10-year, but the 5s, I guess maybe the 2s, a different story, and the 30s. The 10-year hitting its lowest level in 3 weeks. The 2-year hitting its lowest level in almost 2 months. Our next guest is seeing a once-in-a-generation opportunity in everything except the Magnificent Seven stocks. Let's bring in Rich Bernstein, Chief Investment Officer of Richard Bernstein Advisors, and our very own Steve Leisman. Welcome to both of you. Rich, all right, so I guess you're not super excited about Apple after the bell then.
No, Kelly, that's not going to have my attention. I think there's a couple of really bullish things that are going on today. Number one is that small stocks are outperforming large stocks, right? In your little opening, you did not mention the Russell 2000. The Russell 2000 is outperforming the Mag 7 quite a bit today, outperforming the S&P. I think that's a very bullish sign, right? Because we know that profits are starting to reaccelerate. It says the market is starting to pay attention to fundamentals again. Second thing I would point to that's very bullish is that non-U.S. is outperforming U.S. That similarly, based on fundamentals, it's actually quite bullish. The third thing I would point to is that cryptos are under pressure. There's absolutely nothing fundamental about the crypto markets, and the fact that we have stocks based on fundamentals going up on a day when cryptos are going down. These are all fundamentally based observations. I think that is very bullish.
So it's not, so Steve, I'll turn to you because I hear Rich saying it's not just the back of a Fed pivot or anything like that. And I would add, though, it does seem, Steve, like people are running off with the conclusion that they're done hiking here.
Yeah, you know what I like about today, Kelly, is sometimes the market on Fed day or the day after the Fed is like a college kid that wakes up in the morning and say, wait a second, what did I do last night? The market's not doing that today. Sometimes they'll rally into what I think is a really hawkish thing, and I'll be like, what were you guys doing? And they'll reverse it the next day, or sometimes the opposite of that. The follow through, I think, is interesting. I do think there was, it's a little bit complicated, Kelly, but my take on Powell yesterday was I asked him the direct question, is your bias still to hike? And he said yes. He went on in the rest of the press conference to suggest, to me at least, that they're really in neutral. When he said, the risks are becoming way more two-sided. Doesn't mean they won't hike. The question is, do they have to be convinced to hike? And that's where I think they are right now, as opposed to being convinced not to hike. And that would be a bias to hike. I don't think they're really there anymore. I think they're at this place where, look, if the inflation data deteriorate, if it doesn't cooperate, if the economy doesn't slow down, yeah, they'll hike again. But they need to be convinced to do that. And when I look at the probabilities, I'm not alone. That's the way the market is trading. They really don't have much of a probability at all right now on any kind of hike going into March. And then you look at the probabilities of cuts. They're starting to get a little bit bold there. June, 58, 60%, somewhere in there. May, not so much, but then they start to get a little bit bolder. So that's where the market is right now, betwixt and between. Not thinking the Fed is going to hike, not thinking they're going to cut, just waiting to see. But I think that bias may be right in the middle right now in neutral.
Okay, well, it's somewhat encouraging for folks who want to be long equities. But Rich Bernstein, the Russell, which you mentioned, is up 2% so far today, the Russell 2000, but it has been punished this year and had been at lows of the year before now. How safe is it? How patient do investors have to be prepared to be if they're going to be excited about the opportunities here?
Oh, I think there's two ways to think about it. One, let's talk about short term and the kind of cyclical opportunity. The profit cycle is troughing here in the United States. And as long as the profit cycle accelerates, that argues for more cyclicality in a portfolio. We know that small caps are more cyclical. That's what's been scaring everybody. Are some of the debt issues in small caps and things like that. Those are cyclical concerns. If corporate profits and corporate cash flows start to heat up here, those concerns will subside. And so I think there's a huge cyclical opportunity here in terms of the broader market. Longer term, though, we know that long-term returns are defined by valuation. And the Russell 2000 is less, if I'm not mistaken, less than half the valuation of the Magnificent Seven. So that would argue that longer term, small stocks should outperform the Magnificent Seven. And I think that's very, very likely over the next 5 to 10 years.
What about, Rich, the regional banks? The KRE has been in really rough territory, was under 40 for a while. Now it's perked up. It's up almost 5% today, but still concerns about commercial real estate, particularly office. Is the good news, does the good news extend, you think, to those smaller and medium-sized banks as well?
Right. Well, John, it's a little bit funny, and I'm sure Steve would agree with me on this, that people always forget how the Fed injects monetary policy into the economy. They either try to slow down or accelerate the banking system. They either want the banks to expand or contract their balance sheets. People always forget that. So what did we see? We saw a tightening session, and marginal banks, smaller regional banks, got in trouble. There's nothing unusual about that. That's what the Fed, I don't say wants to have happen, but that's the effect of monetary policy. I don't believe the Fed's about to ease, but the more that one believes that the curve is going to re-steepen, or maybe in the future the Fed is going to ease, the more the Fed wants regional bank balance sheets and large cap balance sheets to expand in the banking system. They want to stimulate the banking sector. So the more you think that the Fed is going to be on the side of the banks, the more you'd want to look at that. I'm a little kind of skeptical of that right now. I actually think to some of what Steve said in terms of the bias is still the tightening. I think if profits heat up, employment will heat up. I think that'll make it much harder for the Fed going forward. But if one believes that the Fed is actually going to ease, small marginal banks would make a lot of sense.
What if profits are cooling down, Rich, which is the other way to kind of tell this story, especially with some of the fourth quarter projections and guidance that have been coming in?
Well, Kelly, I can tell you it's not, people tend to look at the absolute dollar value of earnings. And really the important thing to watch is the growth rate. And the growth rate actually troughed probably around mid-year, to be honest, and has slowly been accelerating. It's still negative year on year. But by our forecast at our firm, we think we're going to go from minus 10 to 15% S&P earnings growth to plus 10%, plus 10 to 15 during 2024. And so if that happens, obviously cyclicality is going to be very beneficial in a portfolio because this sounds stupid, but it's true. The cycle is determined by cyclicals.
Well, we'll leave it there. And I'm not going to go on a tangent about ISM manufacturing, Steve. They tell me we got to move on.
Okay.
He says,
I want to hear about Steve's collegial escapades. That's what I want to hear about.
We'll leave it for another time. How's that? Thank you both, Steve Leisman, Rich Bernstein. We really appreciate it today.
Thanks.
Well, to extend Leisman's metaphor, if the equities have continued to party today post-Fed, yields have been mixing the punch. For more on the yields, let's get out to Chicago and Rick Santelli. Rick.
Yes, John Ford, how do you make a 466 yield and Treasury 10-year look cheap? Start out at an intraday high of 502. That seems to be the case. Look at a two-day of 2s and 10s on top of each other. You know, if you looked at where the 2-year was yesterday before JOLTS, it was 505. It's 497 now, down 8 basis points. At that same time, look at a two-week chart of 2s and 10s. Yesterday at 10 o'clock Eastern, we were at 490 on a 10-year, which is currently at 466. That's down 24 basis points. So we've had huge moves on the long end. And as you look at a 2-day of the dollar index, it certainly seems to be following the drop in yields, of course, as it falls from rather lofty levels above 107. And the notion of how this affects the future, well, you could read it quite easily in 2s to 10s, which has reinverted 15 basis points since Tuesday's close. And ultimately, the Federal Reserve may have been the catalyst, but what's going on with long rates certainly seems to be following how much it costs to service our huge and ever-growing deficits. John Fort, back to you.
Rick Santelli, thank you. Kelly, do you like apples?
Yeah, I do. Oh, Honeycrisp.
Let's see how we like these apples. The shares are higher today in Apple as the company is set to report its fourth quarter results after the bell, while the street is expecting an overall decline in revenue. Investors are closely watching the latest on iPhone sales and how demand's faring in China. Our next guest downgraded his rating on the stock to sector weight last month, continues to be neutral. Joining us now is Brandon Nispel, senior analyst at KeyBanc Capital Markets. Brandon, do revenues really matter that much to Apple now, or is it more about vertical integration driving loyalty and profits? What would get you off neutral?
You know, I think the bears will tell you that it is about sort of the user base and the user growth, but I do think revenues do matter. From our expectation, you know, we see Apple setting up for sort of an inline quarter, but when we see various shapes of hockey sticks for growth, that's where causes alarm from our perspective. And so we think from a guidance perspective, that's really where the risk is for the quarter.
How much of this is hanging on China specifically? The post-COVID boost in that economy didn't really materialize the way many hoped. And right now, there's a resurgence in anti-U.S. sentiment. Tim Cook was just over there, probably trying to smooth some things over. Should we watch that line as well?
You know, it's not only, Chinese sentiment shifting back towards some nationalism, it's competition, right? Huawei's launching a new phone, and on our estimates, Huawei's going to produce, 10 to 11 million phones this year, but next year they're supposed to produce closer to 60 million. You know, it's hard to imagine that Apple, from a competitive landscape, is immune from that perspective.
One sort of area of focus too, Brandon, as we know that the top line might not be anything to get excited about, profit margins, can we get excited there or no?
You know, it really depends. I mean, this is a overall story where services are growing faster than the hardware is, and services are much higher margins. So I think you could expect with some softness in services, gross margins will be just fine.
Right, just fine though. I guess my question would be, what ignites the enthusiasm? Maybe top line growth would be enough if we could kind of bring that back. But what would the growth metrics be that would re-excite investors, do you think?
You know, I think it has to be something better than where the consensus is. So the consensus expectation going into, the December quarter is for about 5% growth. That's up from a minus number in their fiscal fourth quarter. So I think they have to get closer towards that expectation. But from our perspective, we see Apple accelerating, but only just barely back to positive growth. There's far faster growing companies that trade at cheaper multiples from our perspective. So I think from at least this point on, that's part of the reason that we're sector weight Apple. We just don't see the value in the stock that's this low growth with that high of a multiple.
All right. Brendan, for now, thank you, and we'll see what happens after the bell today.
Thanks for having me.
Brendan Nispel. Coming up, some huge moves in the media space. Look at Roku, up more than 30% to have its best one-day move, third best one-day move ever, I should say. And green flags, Ferrari up 6%, raising guidance and seemingly navigating around some macro concerns. We'll get details on both of those names when Power Lunch returns. Welcome back. We have some big movers in the media space today, most specifically Roku, up 31% after better than expected revenue and guidance. Even Disney up more than 2% after announcing they'll buy the rest of Hulu from Comcast. Warner Brothers Discovery up 8.5%, despite finding itself in the middle of some criticism. Julia Borston here to break it all down for us. I'm curious about this criticism, Julia, but let's start with Roku. That's the biggest mover.
Huge mover here. I'm talking about a 30% jump in the stock after the company reported better than expected results after the bell yesterday. But the key thing here, Kelly, is the fact that Roku not only beat expectations in Q3, but guided to continuing and ongoing advertising revenue growth in the fourth quarter. I'm just going to read you the key quote here that I believe is driving all of these media companies higher. They said, "We had a solid rebound in video ads in the third quarter, and we expect the year-over-year growth rate of video ads in the fourth quarter to be similar." This idea that the concern that we've seen for the social media stocks that perhaps the conflict in the Middle East would be causing a pause in brand spending, that's just not happening when it comes to the TV ad market. And it does indicate that the overall ad economy is continuing to strengthen. So really key piece of that here.
All right, interesting. Next up, we've got Disney buying up our parent company Comcast share of Hulu. That's not a surprise, but this is sort of a weird process where they're, in the next 4 weeks, going to deliver that first, $8 billion, and then they're going to argue over whether they owe more. What incentive is there for Bob Iger to say, yeah, we'll give you a couple billion more? I mean, this is going to end up in arbitration, right?
They're contractually obligated to. I would say, think about this $8.6 billion that Disney is paying Comcast. It's like a down payment. They made a deal years ago that set the sort of the base price that this asset would be worth. $27.5 billion is the base price for what they would pay for Hulu. So this is Disney paying their percentage of that base price. Now, they did agree to have their lawyers and their bankers figure out how much of a premium to that base price they were going to have to pay. So the bankers and the lawyers are working on that right now, and there is an expectation that there will be some sort of premium paid. So Rich Greenfield, because that was the deal they arranged and the deal they came to.
Valuations were so high back then. I mean, isn't Bob Iger going to say, well, you know, times are dipped. Look at what's happened to media stock. Look what's happened to our stock.
John, valuations were high then, but you have to look at the fact that Hulu has grown so dramatically since then, specifically when it comes to the user count. Now, Rich Greenfield, who watches this space very closely, he is saying that $35 billion seems like a fair starting point for these negotiations. So there is a consensus that there would be some sort of premium paid. The question is just how much. Now, the other thing that's really complicated here when you're coming to valuing an asset like Hulu is we've never seen a huge streamer like this ever be sold outright before. And you also have to consider how much Hulu's value is tied into the fact that it's part of this sort of bundle that Disney has put together with ESPN Plus and Disney Plus as well. But we're looking at some of these analysts saying that sort of look in the $35 billion range. And look, the fact that all of these streamers have reported so much growth in the quarter. We just had Netflix beat expectations by a lot. Now there's some optimism coming out of Roku. That may impact how much this asset is valued at as well.
Yeah, I mean, I guess the only thing they could do to get more leverage would be to say we're not going to buy it, but that's a whole other story. Let's move on.
That ship has sailed. They already said they're going to buy it. That's what the news yesterday about the down payment was about.
Exactly. Julia, let's move on to this final story, which is something I've kind of always wanted to do. A wild story out of HBO. New reports emerging that the former president of original programming ordered the creation of fake social media accounts to troll negative critics. What do we make of this?
Well, he acknowledged it today. He was doing this is Casey Bloys. He was doing a presentation today. He said in the midst of the darkest point of the pandemic, he was spending too much time on Twitter. And he said it was just a handful of tweets that he had gotten one employee to send to critics, and this is not a widespread thing. But he said it was a dumb mistake and sort of in the depths of pandemic.
Did he just offer this up
on Twitter?
Did people know and call him out on it, or did he just randomly interrupt his presentation?
Reported. So this was all reported by Rolling Stone. And it was first reported by Rolling Stone, and then this sort of prompted him to acknowledge it in an event today that was previously scheduled to go through some of the highlights of HBO's programming coming next year. But the idea of a fake Twitter account to troll other or to respond to critics who were maybe criticizing HBO. It's a lot of media noise, but ultimately really does not impact
You don't
these
think
Warner
he'd lose his
Discovery
job
shares
or anything like that for
no,
involving the
no. I mean, the
employees?
fact that he acknowledged it today makes me think that this is sort of water under the bridge. But I just want to point out these shares that are up 8% ahead of Warner Brothers Discovery reporting next week. And I do think a lot of that is on the momentum from Roku. But the fact that Casey Bloys acknowledged it today, he said it was a dumb mistake, I think means that he's ready to move on from it and get to those results that are coming next week.
He might be ready to move on. I think the employee who they made tweet that stuff is suing, and that's part of the reason why it came out.
That is how this all came out. So so the employee, so an employee sued, saying that this employee had been pushed by Casey Bloys to send these tweets, but then Rolling Stone picked up on this lawsuit, which is how we get to this story today.
Maybe we haven't heard the end of this. I don't know. But for our audience right now online, the ad spend coming back is probably the biggest thing. Julia, thank you. We appreciate it. Our Julia Borsted.
Well, coming up, a big opportunity for small businesses. Amazon unveiling its first buy now, pay later checkout options for small business owners. Those details coming up next.
I literally have Tesla freaking up on my shiz right now, and I was thinking about getting long this name. You guys just seen me sitting here looking at it. I'm like, man, I might just take a damn long on Tesla, and there she blows. God dang it.
Option from a firm for small business owners.
All right, let's see here. Here's what I'm going to do. All right, here's what I'm going to do. If we pull it back,
kind of the Amazon effect
if we pull the trigger back
they
right
like a firm.
to
Okay, it's a big deal for a firm for a couple of
yonder,
reasons. If you
right
recall,
there,
in 2020
yonder,
and 2021, there was
218.
all this hype about BNPL.
I'm going to take a
perhaps
loan.
overhype. And what happens
This
here, basically,
is-
the stock collapsed essentially from,
Hold
it's
on.
still
Let me
trading below their
actually
IPO price.
change
That's
that.
because Peloton was their biggest anchor tenant. And as people
Shit,
stopped
man.
buying Pelotons, that business collapsed, and they needed to find growth. And they found it with Amazon, and they found it with Shopify.
Unreal.
And those two together account for about 75% of the U.S. e-commerce market, according to
I missed it. Man,
so
I was taking too long right there, I guess.
That they have
I tried.
embedded,
Guys, I was looking
Amazon,
at it
for
right
instance,
here.
in
I'm
this
like,
case,
wait, hold on.
in this
Because this
deal,
thing
they had
started to
basically
hold, like,
approximately
this
35 billion,
pivot
potentially
down
35
here,
billion in
it was
total
like,
sales volume
where
on the
was
Amazon
it? Was it, like,
platform. 6
here?
million users.
Because I was looking at it,
and
I'm
I think
like, hold
perhaps you
on. I
understand
was
why
like,
they're
this
up
thing
about
could probably
18% today
start
after our scoop.
going.
It's a big move for them. I mean, the
So
stock's
I'm
still
gonna
well off
sit
the
here and
highs,
watch
though.
Tesla, maybe take a
It's
long.
come down significantly.
It's only got room to like
and so they're up
220, and then
100%
there's
this year.
resistance.
The
But if the
firm
market
bears will
continues to
say,
go
look
higher,
at the impact
you
on
know,
rising
there's
rates,
nothing
look at the
stopping
impact
Tesla from
on
going higher.
defaults.
It's
and the rising
definitely the
defaults
laggard in the
on their
market.
user
Everything
base.
else is just ripping and
There is
roaring.
perhaps the
So,
increasing appreciation by the
we'll
analyst
see.
community that, look,
I'm not holding this
their
in
default rates aren't that
overnight or
bad.
anything.
If you actually looked at that, they're about 2 or 3%, which
but-
for essentially a subprime lender is actually really fantastic. They've actually gone down this year in terms of defaults. So you're getting some reasons to kind of believe their story because they believe and they profess that they built a better credit mousetrap.
So is there the equivalent of
This
a
is so
small
insane.
business credit card
This
play
is
here
seriously
for a
just
firm?
freaking
Is there some
insane.
different kind of loyalty locked in
seriously.
versus what they're getting from consumers? Because we've tended to think of BNPL as a consumer thing, but if there's a small business, bigger spending loyalty play, maybe that's significant in a different way.
Well, one of their growth drivers has to be their debit card, their credit, and so that's one leg of it. The other, it happens to be these partnerships, and that's kind of it looks as though the way that they're going to win is potentially just by embedding themselves in these other players. So,
All right. Hugh, thanks. We appreciate it. Our Hugh Sun reporting. Now let's
my
get over to
God.
Morgan
Will they
Brennan
stop
for the
fucking
CNBC
talking
News
about
update.
Trump
Morgan?
and crew? Like,
Hi,
please,
Kelly.
give it a
Well,
break.
Secretary of State Antony Blinken
At least the
just
man
left
gave
the
you a
US
safe
to head to
4
Israel and
years.
Jordan. Before
Where you
departing,
didn't have
Blinken
two major countries going
reiterated
at war,
Israel's
let
right to
alone
self-defense, but
the
also said
regular
Tel Aviv
politicians
has
come back, and now you got
responsibility to
two
protect
different
civilians.
wars
And he said the U.S.
in
will
2
focus on
years.
getting humanitarian aid into Gaza
Like,
as well as setting conditions
give it a
for
break. You
sustainable
can't argue
peace
with
in the region.
putting together a good
Meanwhile, a
squad.
senior Biden administration official tells NBC
don't like
News
how
at
he
least
talks about
79
how what
Americans
he
and their
did.
family members
It's about
have
the
exited
team he
Gaza
put
through
together.
the Rafah crossing in Egypt. The crossing opened to injured civilians and
All right,
foreign
let's see
nationals
here.
yesterday after Egypt, Israel, and Hamas agreed to
Yeah, 220
up to
is where I
500
think
people may
Tesla
exit Gaza daily.
has room to, guys.
Donald Trump's son Eric took the stand
Let's
this
see
afternoon
here.
in the $250 million
see
civil
what
fraud
happens.
trial against the former president's family and the Trump Organization. He testified he didn't know anything about the company's financial statements, but later acknowledged he was aware of them as far back as 2013 when presented with evidence. Both
There's
of
no
Trump's
way in
adult
hell I'm
sons
taking
previously said they
a
relied on
220
accountants to ensure
call
financial
at
records
$200 fucking
were
dollars.
correct. Kelly, back to you.
All right,
There's
Morgan,
no
thank
way.
you very much. Morgan Brennan.
There's no
Still
way.
to come on Power Lunch, going for
There is
brokers. A
absolutely
federal jury in Kansas
no
City
way
finding
I'm
brokers
paying that
liable
much
for
for a
inflating
call.
prices. This
When
as
the
New
stock
York
is already
lawmakers
up
are working to get
6%.
high
And
fees
there's your
under
break.
control. We'll talk to the
This
CEO
is-
of Douglas
this
Elliman
is
about
where
this and
it's
more
either
next
gonna
here
hold
on
or
Power
it's
Lunch.
not.
Don't go anywhere.
That's the 200-day moving average it's hitting. But Oh, no.
Welcome back to Power Lunch. The real estate market is dealing with a host of headwinds, especially as mortgage rates hover right around 8%. And while the high end is holding up better, the lack of inventory combined with high rates are creating a lot of challenges for home buyers. Here on set to discuss that is Scott Durkin. He's the CEO of Douglas Elliman. He's joined by our CNBC wealth reporter, Robert Frank. Welcome to both of you. First of all, Scott, thanks for coming in. Robert, just kind of set the scene a little bit here for us.
So, Scott, the number that popped out for me is the October sales contracts. If you look at apartments sold for $10 million or more, that was triple the number of last year. And it doesn't feel like that kind of market. It feels like a very stagnant housing market. What's going on at the top? The top is always sort of different from everything else. But why is that more so now?
Well, I think the $10 million market is strong because that market's not affected really by anything that's going on, whether it be interest rates or lack of inventory.
Because they're all cash buyers?
They're all cash buyers mainly, and they buy when they need to or when they don't. You know, they're a different kind of buyer. And in Manhattan, we have so much new development now that hasn't been sold before. They want brand new.
I want to ask you about new development because that's been fueling a lot of the sales for a lot of this year. Because in a mortgage, you don't want to. But because of the lending crisis we're in now, there's not a lot of new development in the pipeline or getting started. They can't get financing. Is that all going to run out next year? And what's that going to look like for the market?
Well, I think you're absolutely right. But a buyer might not realize that. And so that inventory in that pipeline, I would start looking now.
Well, that's a nice thing to be able to tell people is hurry up. Can we ask you about this lawsuit about real estate commissions? And what was your reaction to this, and what do you think the significance could potentially be?
Well, I mean, it certainly was a curveball in many ways. I've been licensed 30 years, and I've been doing the same contracts, and my agents and our buyers and our sellers, we've all been disclosing everything that they pay for and we pay for, and
But what would happen, for instance, if they say, you know, whether or not that model fundamentally changes, that in order to get access to MLS or some, you know, you have to kind of open things up that way and it's no longer exclusive. I mean, Zillow's out there arguing today it would be a huge benefit for them. You know, maybe it would benefit the big technology players or something like that. I don't know.
I don't see the benefit. I think it will hurt the housing market in a way in terms of the sellers, and the prices could drop dramatically.
Your stock is down on the expectation that broker fees, especially for the buyer fee, will be lower. Therefore, income to Douglas Elliman will be lower because of this. Is that the case?
Yeah,
Do investors have that right?
I think income for every agent in the entire United States. This is just not here. This is the entire country. And
is what? Income's going to what?
Well, if it does not if the appeal is not won, yeah, you're right. Whatever, the listing agent will have the power and also being paid the commission. But I think you can't just send buyers to 1998.
No, but
we thought
earning
the
3% if you can find your own house online and go there yourself. To
Watch
pay a broker
Google. It could get up to like 132, guys. I think it's going to get ready and start going now.
Well, you need someone to
All
negotiate
right.
it for you.
What's the level rate up here? So I do have them marked.
If I'm buying dinner on
Kinda,
DoorDash,
let's see, 100
that's one thing. I know what I'm getting. I want some fries, whatever. They get
132.
Well, but
132,
homes are
132,
the biggest purchases that most people make.
Let's get
and
it.
so
Let's
saving
get it.
a little
Let's
bit
get
on
it.
commissions versus getting the best deal you possibly can and feeling like there's trust.
Yeah, 132.
I don't know where that factors in.
132, baby.
I think if you're going to go it alone, you're going to pay more. You might not be getting the home you wanted. I mean, at Douglas Elliman, we equally represent sellers and buyers. So for us, it's hugely important. We've hired the best legal counsel that you can get, and we are going to fight this.
But let me ask you this. If you look overseas, even developed markets like the UK, the average commission for a broker in the UK is about 1% to 2%.
Correct.
Here it's 5.5% to 6%. Why is it
Well, let's not forget, the UK doesn't allow a second agent to come in with a buyer. It takes longer to sell because you're paying such little commission. Here, we split those commissions. We don't take it all for one side.
Got it.
We've always disclosed that. It's in every agreement. It's not like we deliberately did this. This is the way the business has been run the last 40 years.
But don't you think that a lot of people weren't aware that the buyer's agent is paid by the seller's agent, and therefore it's not really representing the buyer? They're kind of in the interest of the seller. Do you think more transparency is good for people to understand just who's paying what and who's representing what and what everyone's incentive is? Isn't that a good thing?
Well, the transparency is already there. You've all bought and sold. You see the sheet. You see the final closing sheet. It's there. There's no secret. There's no hiding it. So it's sort of like this is a curveball.
I guess my last question to you, Scott, would be, what do you foresee taking place in your market over the next 6 to 12 months? Whichever way, whatever happens with brokers' fees, but just in terms of supply and demand in the economy, what's the outlook?
We are finally seeing the needle move in the right direction. So October for us was, in some markets, 20% higher than last year, and as well as for 19 and 20. 21 was a year that was one of those years that was phenomenal. But we're seeing the market creep up. We're seeing listings come on the market. We're seeing sellers that were not wanting to give up their cheap money that they had finally decide to move on. And we're being creative. And I think there's a lot of deals out there right now. And October for us was, our last 2 weeks was incredible in closings and in what we call written.
And we'll see if even moves in rates today make November equally so. Scott, thanks so much for coming in today. We appreciate it. Scott Durkin and Robert, we'll see you next block. Robert Frank.
Still ahead, Ferrari is racing higher. The luxury automaker shares surging after a beat and raise third quarter. We'll get the key highlights when Power Lunch comes right back.
Your money.
Welcome back. Shares of Ferrari are up 5% on a big jump in profit in the third quarter, also raising full-year guidance. Robert Frank is back with the key highlights from the report. Robert.
Well, John, Ferrari's market cap topping $60 billion. So Ferrari is now worth 50% more than Ford or GM. Profits up 46%, deliveries up 9%. They're actually making more money per car, and that's because of those limited edition cars they sell for $4 to $5 million. And a lot of customization. That's where customers can choose their own paint colors, their fabrics. That boosts the profit. Their margins now over 26%, which for a car company is amazing. But it was the guidance that investors really loved here. Ferrari raising both the sales and profit guidance for 2023. CEO Benedetto Vigna saying he is seeing no slowdown whatsoever in demand. He said, quote, the order book remains at the highest level across all geographies and across all models covering the entire 2025. So that means they're sold out for the next 2 years. Hybrid cars actually outsold combustion engines for the first time at Ferrari. Vigna saying they now have a prototype for the first ever all-electric Ferrari that's going to be launched in 2025.
Robert, this reminds me of what we were just hearing about homes above 10 million still selling quite well, Ferraris too. But when this does slow down, does it happen suddenly?
It's already happening with Porsche and Aston Martin. So the question on the call by analysts is Ferrari. We've heard from Aston, they're cutting production targets for this year. Porsche said they're seeing a decline. Why is Ferrari different? To your point, it's that Ferrari said, look, in so many words, our customers are wealthier, so they're more immune to these economic shocks or rising rates. And also, Ferrari is a very special brand. The people who are bonded with that brand are really bonded to Ferrari. And so, but I think it's really the level of customer, especially for these limited edition $4 to $5 million cars. These are billionaires or people worth hundreds of millions that really don't care about rising rates. The question from analysts is, if you're sold out for 2 to 3 years, what do you do as a company for the next 2 to 3 years? You have no more cars. That was the question on the call.
You just hold events and you
just hold events and you win a lot of F1 races, hopefully.
Right.
So is it the size of their customer base expanding? That's the growth play for them?
It's really increasing production. They're building a new EV factory that will come on board in 2025. That's going to be the first of what will allow them to make more cars. They make less than 15,000 cars a year. In order to please Wall Street, they're going to have to keep increasing that number while remaining exclusive, and that's going to be the balance.
All right, Robert, thank you.
Thank you,
again,
guys.
Robert Frank. Still to come, drugs, delivery, and discounts. Eli Lilly, DoorDash, and Target are all moving today. We're going to get the trades on each stock in 3 Stock Lunch after the break.